Those are some of the movers and shakers, but the two stories that stand out for me is Rajesh Exports and HMA Agro, where your top two have resigned overnight.
Yeah, not surprising, the reactions on both of those names. The standout mover for today, for the last few days, though, you have to admit, is Sterlite Technologies, up another 5% today. That stock is now at 650. 650, 1.60. And just before we move to our guest, pull up the stock price move of Sterlite Tech for the last 1 month, 2 months, 3 months. I mean, and you will see the insane upticks that have come into this business, and there are promises for the future. They've gotten orders, they are expanding in the US. Oh, wow, what a move this one is. Parag Thakkar.
Don't ask me. Don't ask me. When the stock moves like this, don't ask me.
Yeah, but what a move this is. And by the way, viewers, this is, I mean, the story seems very good, very promising. Is it captured in the valuations? I don't think it's possible for any of us to give a yes or a no out there. We've tried to talk to the management as well and invited them to come. Hopefully at some point of them they'll come and tell the story about what's really happening behind the scenes in Sterlite Tech. Some fabulous order wins, as I said, and some marquee investors have got in as well. But this is an unreal move, arguably the stock of 2026 on the long side. Okay, let's not talk about Sterlite Tech.
Based on the numbers which I see, the stock price looks overpriced, but that is a natural thing. So some people will have understood the story which is going to unfold.
Yeah, exactly. Yeah, it is that. It's the promise of what could unfold, really. And that is what is there. Okay, you know, some more news flow, and then we get into take it to our technical experts. Shrikant wants to talk of course, pharma. I'd love to know what Kush is thinking about some of the movers as well. But what's happened is that this Parag Thakkar spoke about this, right? There's a lot of chatter around easing of the tax rules for foreign investors in government bonds to start off with, maybe some of the others. Shrimi Johnson with more details on what has happened or could happen. Now, Shrimi, I don't think the cabinet threw up too many decisions around this, but what's happened? Dissect it for us.
Yeah, so Neeraj, good morning. It was discussed during the cabinet, but of course, it was not kind of decided or announced during the cabinet briefing, but it was definitely discussed. And what we are learning at this point, that Centre is preparing to ease the tax burden on FPIs investing in select government securities, and this is coming from a top sources. And this is, of course, to attract the overseas capital and support the debt market inflows. And the proposal, we are learning, that could be implemented through an ordinance amending the Income Tax Act, which is expected to provide tax relief on specified government securities held by foreign investor. And in fact, a formal notification is likely after the required approvals are obtained. This is what we are hearing at this point of time, and the government is understood to be considering the ordinance to fast-track the proposed changes. Just for the benefit of our viewers, the ordinance is temporary law issued by the government when Parliament is not in session. So once moved, it will change the tax laws immediately. But they have to subsequently approve by the Parliament within the prescribed period, which is 6 weeks mostly. Otherwise, it may get expired, but that will come later. What policy makers believing that lower tax costs could make Indian government bond more competitive, of course, but now we yet to know the full details that where they are doing that tax tweaking. But so far as we know that FPIs investing in listed government securities subject to 12.5% LTCG on holding exceeding 12 months. And of course, in addition, interest earned on government bond is subject to 20% withholding tax. So any tweaking is expected around this, but not the details we know as yet. This could unfold shortly is what the hint we are getting from the top sources in the government.
I think one point that you made, Shrimi, I just want to get some clarity on that and your view on that, actually. The fact that this is being brought as an ordinance, because if you want to make tax changes and it's a broad policy to encourage foreign investments or FPIs coming in, you can wait. The fact that it's being brought in possibly as an ordinance as soon as possible also displays how urgently the government is seized of this issue?
Yeah, absolutely. Ordinance is all about, taking decision in an emergency situation, specifically for tax laws. In fact, in past also, there are a lot of incidents where government has moved the ordinance when they have to change any sort of tax provision, important tax provision, without going to the parliament. Because, of course, ordinance has its own prescribed timeline, which is 6 weeks mostly. And do remember the fact that monsoon session is coming. The date is not announced yet, but somewhere mid of July. So definitely once it's moved through ordinance, they will have to move the bill in the parliament to seek approval, and debate will also happen. And it will depend on the, of course, LS and RS to approve that bill. But for now, ordinance is clearly displaying the fact that government is kind of firm to change this tax laws to boost the sentiment.
Okay. Shrimi Chaudhary, thank you so much for that. We'll await those details, frankly. We'll await those details before jumping the gun and saying what's going to happen. We're telling you what we're hearing. We're not going to indulge in any speculation, and we'll wait for those details to come in. But if this happens, I think this is going to be a bit of the tonic that the market is waiting for.
Yeah, 100%. If FI is a 92% net short, we need something for them to cover, right? This can be that trigger, small. So, and one another thing which I would like to say is that government should also see one thing, and I would request that they are doing OFSs, right? Because they know that tax constraints are there this year. Right, the growth is constrained, inflation is running high, deficits might run high. That is because petrol and diesel, they have not, I would say they have cut their excise duty, so the collections are less. So if you are doing OFSs, you want to sell stakes in your PSU companies, you want a vibrant stock market, right? And for that you need to do something apart from, of course, saving rupee from falling too much, which is a primary worry right now, why they are doing this. But I would say that this is a second order impact also, right? If stock markets are vibrant, you can do your OFS. You don't have to sell NHPC at 71, right? It might go at 90.
Yeah, well, I hope that happens, because I think the last few years, the trick has been missed on selling the family silver at the right price when the silver was getting sold at the price of silver. And I'm not saying this about silver, I'm talking about some of the stocks that the government intended to sell, could have sold at a higher price, was not able to. Let's see if this time around is different. Shrikant Chauhan, what do you make of the open? And you mentioned about pharma being a sector of choice. What within that stands out for you?
Good morning, Neeraj. I think, the market is like in the range, and till the market is not closing below the mark of 23,200, we can expect upward activity towards 23,500 or 600 sort of levels. The reason is because the markets are highly oversold, and it's not only the Nifty which is showing this particular pattern. Almost all the stocks from the Nifty baskets, they are very close to their long-term supports. So I am of the view that 23,200 is going to act as major support level for at least next few days. That's my view. And we can expect some activity. But yes, in that specifically, pharma companies, they are doing well. Torrent Pharma is on our radar. There we have a bullish targets close to 4,500, 4,600 based on its technical formation. We also like Sun Pharma. There also we are of the view that the stock has fallen to its important support level. Close to 1770, 1780 sort of levels. From here again, we can expect a quick rebound towards the levels of 1850 or 1875 on the minimum side. We also like Biocon. There also we have a bullish view, and here we are expecting 400, 410 going to act as major support for the stock. So in case if there is any correction in this market and the stock, in fact today, it was around some 405, 407 sort of levels. From there, all the way it is coming back to 410. So today also, I think even at this price, it's a buy with a stop loss close to 400. And finally, from the mid-cap space, we like Spark, Sun Pharma Advanced Research. The stock has found a very good support close to 195, 200 sort of levels. From here, again, the stock can gradually move towards the levels of 225 or 230. So broadly, I think pharma stocks can give some trading bets in this market.
Okay. spark and give some trading bids. What about the index? As you see, it's opening. We talked about whether there will be, and when we opened, we talked about whether there will be a mid-day recovery. Do you predict that happening?
There is a possibility that we might see a rebound from here. Just a couple of technical points. We spoke of very initial signs of positive divergences. They're getting strengthened. Also, if you see the 23,300 put option is starting to add some base. So you've got a few things going for the index right now. Like we said, heavy shorts. Any trigger on short covering could take the index higher. If yesterday's lows are maintained on Nifty and Bank Nifty, we could see recovery, maybe not today, but maybe in the couple of days to come. But now I will play again for that rebound trade on Nifty, even on Bank Nifty. So the view's turning mildly positive, but like I said, for a rebound and not a reversal.
For a rebound and not a reversal. Well, depends on whether you want to position yourself for that rebound and not that reversal. Maybe you will get details of this ordinance also today. So just watch out for that as one big factor. Thank you so much, Coach Parag Bhai and Srikanth, for joining us today on this leg of the show. But we're keeping the focus and the spotlight on Nifty IT. It's back in the spotlight as the debate over artificial intelligence intensifies. It's blow hot, blow cold, dizzying roller coaster ride of what's happened with the Nifty IT index as well. Let me go across to Puneet, who's just dotting those plot lines of what has happened in the last few days. Puneet, where there was euphoria for a couple of days and then a complete dismal point 2 days later.
Well, most certainly, and it's been a torrid time the last 3 to 4 months for any IT investor at this point of time, and we just decided to plot that out as well. So if you look at some of the key factors, the AI disruption has been one of the key ones that has been impacting the sector. But as you see, and this is what's happened since February as well, where that Anthropic releasing those AI tools sparked that sharp sell-off on the IT players, multi-year re-rating and de-rating essentially at that point of time is what triggered that as well. You also saw that consistent correction hold and hover around till the month of April. The earnings also came and went by, but not too much happened in terms of stock reaction. So that continued to be a story that continued to impact all these IT companies. Then you had some comments coming from NVIDIA. Jensen Huang dismissed fears of AI replacing, IT services as well as the software companies. The story largely being that these will be needed for integration for AI into these enterprise companies and software companies as well. And hence, while you hit a low on the May 15th, you then started to see a sharp rebound at that point of time. Was short-lived because you also saw the correction starting to happen yet again, where the Nifty IT rebounded from 14% from the lows that we saw in the month of May, and then yet again we are now at that phase of the correction where over the last 2 days especially we've seen correction across the board. So the jury is of course still out on it. If IT services will still be required or will the AI models replace it, that will be one of the key questions. But the second one being that the headcount addition revenue growth story is now over, and you have to look at the company's products, businesses now as well, and can't just rely on headcount addition, which was the decadal story of the last few years.
It was a decadal story of the last few years. It is, I think, a dizzying story of the last few weeks because one can't understand what's happening. Sandeep Agarwal, fund manager, Sovilo Investment Managers, joining us on the show. Girish Pai, research analyst, head of institutional equity research at BOB Capital Markets, joining in. Gentlemen, a very good morning to you. We're looking forward to this conversation because the lack of clarity is what is worrying as far as IT stocks are concerned, and how trigger happy the reaction seemed to be. Jensen Huang made one statement and then for 2 days stocks are rallying. And then there's a brokerage which comes and puts out a report on Accenture and then they back down in the dumps. What side of the debate are you on, Girish Pai? Are IT stocks in India a write-off or we're not seeing the value yet?
So thanks for having me, Tamanna and Neeraj, on the show. So I'm in the cautious camp, and I think we are in the value trap zone as we speak right now. Yes, the index is kind of corrected quite a bit from the peak that it displayed, I think, in December of 2024. We're probably down about 35%. I think there are dip buyers who've kind of come in. So if you look at the last 25 years, there have been multiple big dips that have happened post-dot-com bust, so to speak, post-GFC, post-COVID. There have been these big dips, and whoever has bought at that point in time made fairly serious money. And I think some of the buyers, and these I think are largely domestic, I think that probably this is another such occasion. I beg to differ on this. I think the situation that's kind of coming about because of AI is a business model change, which is very different from what the technological changes that have happened in the last 25 years, which I think the Indian companies have kind of handled those very well. This is very similar to what happened in the global IT service industry between 1995 and 2005. So the incumbents at that point in time, the global leaders, EDS, CSC, HP Global Services, IBM Global Services, they are either non-existent or they are existent but irrelevant as we speak right now. So I think we're probably going to go through that kind of disruption. So we've grown largely, the industry has largely grown horizontally. We've moved from application development maintenance to BPO to ERP to digital to IMS and all that, and through various verticals and through various geographies. And we've talked about moving up the value curve, value chain, doing higher value-added services. It's been largely lip service, so to speak. We've not really done that. AI is forcing us to do that, in my opinion. And my take is that cost-effective IT services, in my opinion, is under pressure. Moving up the value chain would mean that you're competing against some new set of players where you need to sell to the non-CIOs, non-CTO kind of individuals. And there, I think the players like the big four have much better relationships with some of those CXOs. And to that extent, we are probably at a bit of a disadvantage as we speak right now. So I'm quite cautious. I think industry will probably grow revenues in the low single-digit territory for at least the foreseeable future.
Oh, wow. So Girish Pai in the cautious camp. Sandeep, you pivoted recently, where you were very negative IT, and then the last few conversations we had, you said that valuations changed the story. Are you still sticking by that stand?
Yeah, hi, good morning, and thanks for having me on the show. So Tamanna, I will take 1 minute and I will explain you what is happening. So, if you go and see the hardware cycle, right, almost 20 years, there has been no substantial growth in hardware cycle before AI kicked in. So last 2-3 years, you have seen substantial spend on hardware, and hardware cycle comes in for 3-4 years. It is a hockey stick growth, mad growth, and then you go in hibernation, because whatever hardware you bought, basically it is like buying a house. You have bought the house now, and then you have to build the furniture. That means you will put that operating system platforms and the sales platforms, which the big seven in the US are doing. So I think that Google, Microsoft will be very, very big winners of this, and they will see a sustainable good growth of the low double digit for a longer period of 4-5 years. That goes without saying. I think this hardware and GPU, we are in the last leg, maybe another 12, 16, 18 months. There could be some sale, and then you will see a very sharp dip, which should come in my view, followed by good growth continuing with these platform companies, which are able to sell what they are building with this hardware. So you have to remember that hardware is for building the product, that is the software or the platform product. And these companies which are building the hardware and software products, they will have a longer growth, but lower growth, not like 100% growth of NVIDIA and AMD. Then comes the third, which is the service provider or the outsourcer. So we will come into action once the product and the platform players make the product which they have already made. You see the revenues of Anthropic and all other. Now that will need servicing. So see, I was very, very negative 14 months back, because as Girish said, I think that minimum 30% effort cut is there. So we were in an industry which was matured in the US market, growing at 4-5%, and then you have 30% cut. So no way you can have 5-6 peg ratio, 40 times multiple and all that. And I was very clear that 50% index level cut has to happen. And I think broadly we are there, 35-40% cut has happened. But now you have to also put into this thing that 18 to 24 months of this has happened. So hardware sales are broadly behind. We are in last leg. Product platform are broadly built. You will need servicing of them and rectifying them and providing services on that. And now, the index has corrected 40-50%. At the index level, stocks have corrected even more. And more importantly, we have currency which has depreciated 15-16%. Now, the counter argument everyone on the channel is coming and giving is that last 10-12 years, none of these IT companies are showing the benefit of currency, which is grossly wrong, because you have to also remember after 2014, after new president came in, he enforced that you have to have localization. So we have 22% local resources, which has now moved to 75. They have taken away all the currency benefits, but there is no incremental cost from here. So I believe lower growth for longer, next 5-6 years, but very high PAT growth is the story of the industry.
Okay.
That's all from my side.
Girish, do you concur that there could be very high PAT growth? I mean, there is a CEO who recently wrote that what Anthropic did was effectively kind of putting to validation the requirement for software services, whether Anthropic does it or some others do it, right? Is there a chance of very high PAT growth? And if not, why would you say that there will not be profit growth?
No, I'm not saying that there's going to be no profit growth.
No, he's saying very high profit growth, Girish. Are you saying very?
No, I don't think there's going to be very high profit growth. I would beg to differ with, with my counterpart there. I would think that profit growth is going to broadly mirror the rupee revenue growth that's going to happen. So my sense is that we'll probably see the industry, and I'm talking the tier one companies growing in the low single digit territory. Maybe rupee will depreciate by about 2-3%. I don't see rupee depreciating in a very material fashion from here on. I think the depreciation is going to kind of come off from where we are. So it's going to be much more measured rupee depreciation. So I would probably think that PAT growth will be in that 5-6% territory. So you need to understand that the industry, if you look at FY15 to FY20, the dollar revenue growth of tier one companies was about 7% CAGR. And in that time frame, tier one companies, the mean PE multiple was somewhere in the 18 times territory, forward territory. Today, we are growing at 2-3%, and I don't foresee in the near future a growth higher than that as we speak right now. And you need to figure out what is the multiple you want to give. I'm not in the camp that we'll probably see any kind of material margin expansion from here. I think margins at best will be kind of held on to. I don't think whatever benefits that AI is going to bring to vendors, I think quite a bit of that is going to be given back to the customers. And I do think that there is going to be some bit of change in the structure of employees as we speak. I think there is discussion around a diamond-shaped structure. Yeah, the companies will try to get better rates for the more experienced employees in the future. But my sense is that it's not going to lead to any kind of material margin expansion. So if that doesn't happen, I don't see a acceleration in revenues. Now, I could go wrong if this whole discussion that's happening these days, if you look at what companies are saying, is that there is a TAM expansion, that the total addressable market is going to expand in very material fashion by not just taking cognizance of the IT spend. You have to look at the entire operational spend of customers. Now, that to me is a bit of a stretch as we speak right now. Yes, if it does happen, it's going to be great. But then, as I said, that is going to be a territory which is going to be where you're going to see a lot more competition from the consulting firms. And I would also wonder, why would people need, if you don't require a very large labor pool, cost-effective labor pool, why would you want to do that? You would do it internally.
Well, but Girish, maybe a lot of tasks in the past as well, you could have argued, could have been done internally but were outsourced to companies. But I take your point, and I want to get Sandeep on that argument, because Sandeep, Girish makes one very valid point. The rupee having depreciated so much so swiftly, from here on, the case for a rupee depreciation, a swift rupee depreciation may not be there. Is there a case for a very high margin expansion, and why so, for you to believe that the profit growth will be strong?
No, so, what we have to look at is, for example, what is your net foreign exchange which you receive annually. And if you do that math, means I have done that and we have in Excel, the amount are surprising. Means I can tell you no one today is predicting those numbers. You just put the number what net foreign exchange in different currency these companies get a year. And let me tell you, the easiest way to look at, another way to look at it will be that, you divide the EBIT margin of each of these companies by 100, and you will see the sensitivity towards EPS. Let me tell you, I have done some sensitivity. In my view, most of the companies will have 15 to 45, 50% EPS delta just because of currency, forget growth. So even if we go by, let's say 5-6% growth, I don't see any reason why EPS will not be more than 60-70% in next 3 years from current level. Means it is not possible mathematically. So if you have more than 70% EPS growth from here in next 3 years, why will stock remain here unless they further derate by 60-70% in terms of multiple, which then they will become a bad case than NTPC in my view, which is very unlikely.
Okay. So then now let's come to what the action is or what the calls are, because then there's views. You're seeing that everyone has a view on IT right now, but what is the action on it? Girish, looking at where IT companies are and their current valuation, is there any kind of an investment case in some of these IT majors? If someone's in it, do they hold on or do you stay away entirely?
No, I wouldn't say make it zero. I would say be underweight the sector as much as possible. And within the large cap space, I would probably look at a Tech Mahindra to some extent, and maybe an Infosys today to some extent as potential investments in the tier 1 space. In the tier 2 space, we have recommendations which are favoring First Source and eClerx, which are BPO companies, which, in my opinion, could be challenges on the IT services side to some extent. I mean, that's what First Source CEO kind of indicated, that with AI kind of coming in without a requirement of a large army of coders, then there could be a situation where they could become challenges on that side too. So I think these are the few I would kind of look at this point in time. I would be seriously underweight the sector.
Seriously underweight the sector. Sandeep, what is the investment theory or the investment decision?
So see, we run a PMS. I will not give you name, but I will tell you what not to buy. So I will say that stay away from ER&D companies because they are super, super expensive, and I don't think you will make money in them. They will grow better than IT services. But any traditional IT services, this after 24 months into the disruption, and I'm all talking about cycles. You see, last 25 years cycle, I have seen 7 cycles in that. Every time after 24 months of disruption, big rebound comes in growth, but always comes in the software services. So I will stay away from ER&D. I will stay away from everything which is 1.5 or 2 times PEG ratio. I will stay with anything which is less than 1.5 PEG ratio, because that will give me easily 30, 40, 50% return in next 1 year, 1.5 years. That is what my view is. And, I believe that, at some point of time, the analysts will redo their numbers. And when they do redo their numbers, they will concur with my view. Either you say that this company should trade at 50% discount to NTPC multiple, or you say that, there is a big return to be made. It cannot be, none of this.
So, Girish, I want a quick response from you on that. You think 30, 40, 50% in the next 12 to 18 months, and eventually analysts will come to his view, is what Sandeep is saying.
Well, we agree to disagree on this is all I can say at this point in time. So my view is that I think we're probably in a bit of a value trap. So there will be these bouts of movement that could happen. So as Sandeep was mentioning, there have been these big corrections, and if you bought into those corrections in the past, you made money. My sense is that this correction is for a particular reason. And this reason is a business model change that is happening. It is not like what we've seen in the past. We've had corrections in the past, post GFC, post .com bust, post COVID. I think this correction is very different. It is driven by something much more fundamental. And this is, as I said, very similar to what we've seen in the past between 1995 and 2005. And there was serious value migration that happened between then incumbents, the EDS, CSE, all those players towards the Indian companies, which are offshore players. So that the value migration happened from the on-site players to the offshore players. I think here now we have a situation where cost-effective IT services, which is largely execution-driven, is changing. That paradigm is shifting. And to that extent, I think there could be some new set of winners. I'm not saying that all the incumbents are going to be losers. There will be some who will pivot very well and who will be winners. But my sense is that there could be some new winners who are going to come through. So it's very difficult for me to kind of stick my neck out and say that, we'll see a 70% hike.
Girish, sorry, we are completely out of time, but just wondering, just to probe that, when you say new set of winners, you mean within that IT ecosystem or otherwise? In India, I think.
Yeah, I think you could see some new players come through. So I've been talking to some new players, startup companies. We've seen some very senior management folks out of some of the IT services companies step out and start up something of their own, because you don't require the army of talent that scale players have been kind of taken advantage of in the past, in the last 25 years.
Okay. Valid point. Well, at some point of time, maybe we'll try and do is there a moment which ushers in newer kind of IT companies? They may not be IT service companies, but IT companies out of India. Would be interesting to see that.
I propose a redux of this conversation 6 months down the line from Sandeep and Girish. I'm going to take your time now itself, and then let's see what happened. We'll do this every 6 months and see where it's going. How about that? I think we need to track the story more closely with these two views. So that's the bull versus bear case on IT. Very interesting discussion, Neeraj, because absolutely polarized views and reflecting what's happening with the index. So for viewers, you need to pick a side right now if you want to make an investment with conviction, or if you find it too confusing, just stay away.
Yeah, or let the volatility ebb and then make a bet. It's okay to buy something 10% higher, I guess.
Yeah, I suppose so. All right, NLC in focus. NLC India remained in focus after signing a nuclear power joint venture with NPCIL and expanding its presence in critical minerals through a tie-up with IIT Dhanbad. Before we get the management to talk about these developments, Parth joining in to set that conversation up.
Thank you. So the interesting thing is that NLC is trying to expand itself beyond coal and renewables. And for this, they have announced two partnerships recently. The first one is that they have signed an MOU with the NPCIL to develop 700 megawatt of PHWR based nuclear projects. We all know that India is targeting 100 gigawatts of nuclear capacity by 2047. And this move by NLC will strengthen their presence in the clean energy space. And secondly, as you mentioned, that NLC has also signed an MOU with IIT Dhanbad for critical mineral exploration and extraction research as well. They have already secured 2 critical mineral blocks and are evaluating more assets currently in time. So overall, they are trying to align themselves with India's energy security, battery ecosystem and mineral ambitions. Now, the key things to watch going forward will be the timeline for this first 700 gigawatt PHWR based nuclear project, the progress on the additional critical mineral block acquisitions and the contribution of this nuclear and critical minerals for their long-term growth.
Okay. Well, thanks for that part. Let's get in Mr. Prasanna Kumar Motupalli, who's the CMD of NLICL, to speak about this and the other things. Thanks so much, Mr. Kumar. Really appreciate your time. I address you as Mr. Kumar. Is that okay, sir?
Yes, exactly.
Perfect.
No problem.
Great. Thank you. So I would love to understand what the business momentum is as well, but maybe start off with this JV that you're doing. What is it for? What's the rationale? And how long does this take?
Actually, for last more than 6-7 decades, NLCL is contributing to the energy security of the country. Starting with lignite mining, lignite-based power generation, we diversified into coal-based mining and coal-based power generation, and taken lead in the renewable power generation, becoming the first company to add 1 gigawatt renewable capacity. And we are taking lead in almost all green initiatives that are available as on date, be it storage or green hydrogen. So in continuing this, in line with the mission 100 gigawatt by 2047, the nuclear, we associated with the NPCL. NPCL is having world-class nuclear technology, and NLC is having good project management capabilities, and is the only company in the country to have IPMA level Delta certification. So with this cooperation with this joining hands with NPCL, will facilitate installation of some capacity, because we believe that going forward to achieve the target of energy independent by 2047 and net zero by 2070, we require huge quantity of clean and green energy, which is possible through nuclear.
But Mr. Kumar, so one is, of course, to go for energy security is in the need of the nation. Two is, of course, what quantum of an economic sense or a business profits case is this? Could you talk about that? It's great that you're doing this. How does it financially benefit the company?
As you know, nuclear power plant, they require huge capital investment. But at the same time, they give regular revenue flow for more than 50 to 60 years. So we just signed an MOU with NPCL. We are evaluating the site selection and other process. And we are having a healthy balance sheet and funding all our initiatives through our internal resources only. So going forward, whatever investment we do it taking the interest of investors and the company balance sheet in mind.
You know, what is the kind of capex? Good morning, Mr. Prasanna. Tamanna here. What is the amount of capex you will require to actually implement this nuclear push, this nuclear power push? You had an FY26 capex of 9,131 crores, and that was an increase of 18% year on year. How are you looking at it over FY27?
Madam, FY27 we are targeting more than 10,000 crores capex, and for our projects which are already in pipeline, and we are going to infuse capex of almost 1.25 lakh crore over next 4 to 5 years, and we are planning to fund this capex through our internal resources. We require equity of around 23 to 24,000 crores. So which we are going to fund through our internal resources, and we are also planning for asset monetization of our renewable resources in line with the Government of India target. And with these two, we will be able to fund our entire 1.25 lakh crore capex that is required for our target, reaching our targets.
Give us a little more detail about this asset monetization plan of your renewable assets. As you spoke about, yes, it is a mandate, but how are you proposing to do this? Have you identified those assets? What are those timelines looking like?
Madam, whatever renewable assets we are having in NLC India Limited, we formed a 100% own subsidiary and NIRL, and we have transferred all those assets to NIRL from the 1st January 2026. And we got all permissions from Government of India for this asset monetization, and going to market for 25% of the assets. So we are in the process of doing that in fast track mode, and we are hopeful that we will be coming up with IPO in September or October of this financial year.
Okay. What is the kind of growth that one can envisage, sir, for, let's say, FY27 and 28? You've, of course, in the last 2 years expanded margins from 26% to 32%, but you've also enjoyed 35-36% margins in the past. Revenues have been largely around this level that you reported in FY26. Can there be a bump up in revenues, in margins, in profitability over the next 1, 2, 3 years?
Sir, as you already seen, the financial year 25-26 was the golden year in the history of NLCIL. We achieved many all-time highest coal production, all-time highest renewable generation, and all-time highest profit, EBITDA, market capitalization, and there is all-round improvement in the performance. That is mainly attributed to one, the capacity addition, which we had almost more than 1 gigawatt of thermal and renewable capacity addition we did. And with some financial discipline and refinancing of the loans, with all these things, our margins improved and we achieved all-time highest ever profit. Going forward, we are having aggressive capacity addition program in the year 26-27. Also, we are going to add more than a gigawatt. And our Ghatampur Thermal Power Station Unit number 3 is also on the verge of commercial operation. Until 2030, we are having aggressive capacity addition program year on year. So whatever growth we have shown now in the financial and physical performance, the same thing will continue in the next years also, because we are having phase-wise capacity addition program and all projects are in progress.
Okay. Thank you so much, Mr. Motupalli, for joining in today and talking to us about the NLC journey. Let's pull up that stock also very quickly. Some interesting things happening there on rare minerals. There is some work happening there as well. And on nuclear power, you're seeing some recovery in that stock. But we should actually pull up the markets because that's where the real recovery is from the lows of the day. And we talked about it this morning about how technically you're set up for an extent of recovery, but you're seeing that come in 23,400. You're back above that after that sharp downtick. And I just want to address this story that Shimi Chaudhary, our Delhi bureau chief, put out a short while ago, which says, we told you first this morning that the government is planning to give an ordinance, is planning to bring out an ordinance to ease taxes for FPIs. Now we're learning that the government may scrap, we'll pull up those lines please, government may scrap the 12.5% LTCG levy on eligible government securities. FPIs currently pay 12.5% long-term capital gains tax on listed GSECs held for over 1 year. Of course, the final contours will be known only after that official notification is issued. Let me go across to Shrimi for more on this. Shrimi, what are we learning so far, and what is the timeline in which these announcements can come? What are you hearing?
So, Tamanna, we're all waiting for that ordinance and the notification actually. And
since last evening, I know.
Yeah. So, in continuation to our coverage, what we are learning from the top sources that government may do away with the entire 12.5% LTCG tax on investment in specified government securities. Now, they're talking about specified GSEC, which we need to see because the proposal is understood to have received backing at the policy level, and it was clearly discussed in the cabinet. Of course, it was not announced because Finance Ministry usually announces this separately. The final contour is we need to wait for until it's officially notified, because what I'm learning that it's required a lot of process and approval, because it requires, if you move an ordinance, you require president approval as well. So we are waiting for that. But one thing is very clear that they are the chatter around that they perhaps reduce the percentage of tax, which is 12.5% to 5%. That's not happening. What we are learning at this point is they are going to exempt FPIs fully, but we need to see the specified government securities that they are talking about, and the contour of that how to what extent they are going to impact the overall FPI. So we need to wait for that, Tamanda. But for now, they are going to scrap fully is what we are learning, and we need to wait for the ordinance for sure.
Okay. Just want to pull up the intraday chart of the Nifty. Let's pull up the small cap and the mid cap index as well. The idea maybe from the government's end is to quell fears about that FPIs may have coming into India. But my point, Neeraj, is that if this is what we're going to be seeing and it's limited to exemptions of tax currently taken on GSECs, does that really help or enthuse the markets beyond a point? That problem stays.
Yeah, maybe it's just meant to do the shoring up the currency in whichever shape or form in order to give the RBI the ammo to be on hold. I guess, $20 billion worth of annual flows or thereabouts. Even if FI is not interested in equities, if they come back in debt, and there's some bit of a flow coming back or reversing into India, maybe it's welcome.
Yeah,
I don't know. I see no other reason. I don't know about you.
I wonder if it will be welcome, or is it enough for FPIs to make their way back, is the question that I have in my mind, considering look at what's happening with US Treasury as well.
Yeah.
There is enough and more on the buffet table right now for FPIs. You're not looking the most appetizing.
Yeah, so because you are rupee adjusted at the same levels on the yield as the US Treasury, how do you then incentivize? By reducing tax so that at least that window becomes open. I don't know if the call on equity taxation is so simple for this government, considering they've taken a stance that we are attracted and we are going down the path of having more taxation to reverse it. I don't know if they'll be able to take that bite.
Yeah, I mean, people are hoping for a lot more than this,
Yeah.
but you are seeing a recovery. Look at the Nifty small cap 250 as well at this point. We'll take a very short break. Markets are seeing a recovery. Is it a technical one? Is it more? All of that. We continue the conversation on the other side with Vinay J. Singh of Ask Private Wealth. We'll be right back.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबर शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबर शक्ति SDTMT,
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. Okay. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war.
Back with India Market Open right here on NDTV Profit, and the markets have had a bit of a uptick, and some of that has to be on positive news flow for individual companies, as you're seeing on the right hand side of your screen as well. There is a Jain Irrigation, there is a Hero MotoCorp, and a few others which are doing well, Gina Seco, Life Care, Orister, Light Tech, etc. But there are some tough news flow as well. Rajesh, Exports is a case in point. I would suspect Ola Consumer, which is different from the Ola Electric, which is listed, of course, but it's a company, and Vanguard, a large investor, has sharply cut Ola Consumer's valuation to $70 million. It's a massive drop from its earlier multi-billion-dollar levels. The markdown reflects continued financial stress. And Puneet, who's analyzed this very closely, joins in. Puneet, this is what? A 90% erosion from its peak or more?
Well, from its peak valuation, it's a 99% erosion.
99%, huh? Let that sink in.
And almost 90% erosion from what Vanguard had invested in. So they currently marked down, and this is according to a filing that they put out on the US SEC, where they feel the current valuation is $70 million versus $5 billion when they had invested it almost 11 years ago. Now, they had invested almost $51 million at that time into Ola Consumer, and $5 billion was the valuation way back in 2015. There have been multiple cuts to this valuation. Now, they had earlier cut this down from $5 billion to $1.88 billion in early 2024, and this was further cut down to $1.25 billion in May 2025, and now this big revision yet again to just $70 million. It also comes at a time where the financials have been dwindling for the company as well. For FY25, the revenue was down 42% for the company at 1,170 odd crores, and net loss has widened to 662 crores versus 329 crores. This includes multiple businesses, but Ola Cabs is one of the biggest ones into this, and comes at a time where there are a lot of media reports claiming that the company could go for an IPO, but this valuation markdown doesn't bode well for the company. And of course, as you rightly mentioned, this is separate from the listed entity Ola Electric, which has had challenges. But if Ola Consumer does go for an IPO, it will have to solve a lot of problems of its own, as well as what the perception is with Ola Electric, that investors have been bearing the brunt of losses at this point of time, those who all invested in the IPO for Ola Electric.
So is this part of the listed entity, this business that has been, the valuations have been watered down, Puneet?
No, this is not part of the listed entity. This is Ola Consumers, which has the cab business. And the listed entity is, of course, Ola Electric in the electric two-wheeler space, both different entities. But I think the perception might be hit if Ola Consumers decides to come for an IPO whenever they do.
Okay. So we are making that clear. This is not the listed entity, but it is the same management. So which is why important to highlight this. Let me go across to Vinay Jaising, CIO and Head Equity Advisory, Ask Private Wealth. Vinay, you're joining at an interesting time in this morning's coverage when suddenly markets are perking up and finding something to be excited about. But are you feeling largely optimistic and looking at value right now when you see the screen, or are you thinking that there is some issues which need to settle down first? What is the mood right now?
So very clearly, the mood is macro vulnerability is, I think, the two words which come in every investor's mind, be it FII outflows or be it crude oil prices. These two is leading to a dual issue as far as the country is concerned, be it the fiscal, be it the current account deficit. Both are being questioned. I don't think India has been questioned on the economy front, I think in the last 4 to 5 years, as much as it's being questioned today. Because of this reason, the mood is clearly somber as compared to being a lot more optimistic for India as a country. Having said that, a very big silver lining which has come into the picture has been the quarterly results. Remember, the results of the quarter, Jan, Feb, March, which have come out have been virtually pre-war. There were 2 months of no war, and the month of March was when the war started. So it's had 2 months of pre-war and inventory which helped them. And out here, the earnings surprised a lot more for the mid-cap space and the small-cap space. And as we are aware, when earnings come, that space of the market has done a lot more better than the large-cap space, which is, I wouldn't say disappointed in earnings, but, it's been not too good as far as earnings are concerned. So to summarize, two key variables where the market is looking out for: energy, FI outflows, leading to a lot of pain as far as Forex is concerned. At 95.6, India is the worst performing currency in the last year, down as much as 13 to 14%.
Okay. Vinay, we are at the cusp of the monetary policy decision, and the decision may well be standing pat and not doing anything. There is talk, and our colleague Shrimi is just at about 9:15 odd broken the story about the possibility, right, of some changes to taxation on the debt side for FPIs as well. It may be yet another attempt to give some breathing space to the Reserve Bank of India as well for standing pat. What do you think the RBI does and says, and what could the impact of that be on equity markets?
Thank you. Wonderful question. If you look at what's happened in the last 3 months, we've had $50 billion of outflow, right? So the overall Forex reserve is down from almost 730 to about 680. I'm not counting about the net shorts because then the numbers are much lower at about, somewhere close to 580 billion. So that pain point coming in be it either because of oil prices or FI is a pending issue. The REER has gone to 90, 91 levels, which means that, the rupee is oversold, but there is a lot more pressure. Can the rupee go to 100 is the question people are asking. So what can RBI do? If I look simply at a 5-year stretch and look at the interest rates 5 years earlier to 5 years today between US and India and look at the 10-year rate, 5 years ago, the differential between the two was 4.5%. It was not that the Indian interest rate was much higher. The US interest rates were much lower. Today, the interest rate differential is 7 minus 4.5, about 2.5%. So that differential gap, if earlier we could get FIIs coming into the country thinking, that we'll come up with a debt instrument, or if we were to raise interest rates, we were already at a 4.5% gap. Now, to bridge that gap, you have 150 to 200 basis point interest rate required for FIs to look at India a lot more interestingly, or for us to put up a debt paper. So if RBI were to raise interest, I'm just saying hypothetically by about 25 basis points, as US is also expected to raise interest between December and January by about 25 basis points, that is not going to change the needle. I repeat, that is not going to change the needle. So it is not what RBI does on Friday, which is as important as other levers which RBI or the Indian government uses to stabilize the rupee. What can they do? The biggest thing, and they did that in taper tantrum times. Remember, in taper tantrum times, the interest rate was increased by 300 basis points, not 25 basis points, right? So if you want to get some NRI deposits coming into the country, you need to have some losses made by the banks and a much higher, much more lucrative rate given to the foreigners to get money into the country. The other choice is obviously reducing the withholding tax as far as debt is concerned first, and obviously looking at what's happening to the equity market as well, reducing the long-term and the short-term capital gain tax for the global investors. So these are thoughts which the government has to very seriously look at today, a lot more than ever before.
Vinay, we're reporting that the government is planning an ordinance. We could get the details anytime, really, to ease off some kind of taxation and attract FPIs. What we are hearing, and I'm not asking you to comment on what we're hearing, there is a broader question, don't worry about it. What we're hearing is that the 12.5% long-term capital gains tax on G-Secs for FPIs may be waived off. Is that going to be enough? Is there anything really that can be done in the form of these tax eases which could come in that will actually attract FPIs back, or is there a bigger issue here at play?
This is if the government were to reduce the withholding tax of 12.5% or higher number for the debt instruments, you will probably see India getting into the Bloomberg index for the world, and you'll start seeing $24 to $25 billion of debt inflows coming into the country, which could clearly in the medium term reduce anything as far as forex reserves are concerned, which is increase the forex reserve and reduce the problem as far as the rupee depreciation is concerned. So that would be an amazing move. That would get Indian debt into the limelight as well. The markets would cheer for it, absolutely. And that's one of the things which the government may be forced to do.
Yeah, so Vinay, in some sense, is this, if this were to happen, right, is it more an attempt to give breathing room to the Reserve Bank of India under the current stage and not as much a move to get FIs lock, stock, barrel into the country? This is one of the many attempts that you reckon the Reserve Bank of India could do or the government could do.
I think this is one of the best attempts. I'm just changing your words a little bit.
No, of course.
It's one of the best attempts for the government to do, which is not touch, the interest rates, because as I said, 25 basis points is not going to change the needle. You need to raise it a lot more. So if you don't want to do that, you're pretty comfortable with the inflation levels as far as India is concerned. Remember one point on inflation, because it's important out here. Our oil analyst tells us the oil price, petrol or diesel price hike in India at about 7 to 8% is way lower than the rest of the world, where it's been about between 20% to 50%. So inflation is not going to hit India as much. So you would normally not raise interest rates. Now, if you normally would not raise interest rates and the country is getting into a capex cycle, the issue is more the current account and the fiscal deficit. To solve that, why not first cut the withholding tax on the debt front to attract foreign debt coming into the country? Once the foreign debt issue gets partly solved, the forex reserve issue gets solved and the rupee stabilizes. I think that's one of the best actions the government could take today.
Okay, let's talk about what looks attractive right now, Vinay. And we had a rousing debate earlier in the show where we had a bull case and a bear case for the IT sector, considering the kind of volatility we have and how fickle-minded investors seem to be, whether it's one statement from Jensen or one brokerage on Accenture, and then the entire mood changes. Are you seeing any value in Indian IT software companies as they stand? And are you finding the valuations currently attractive, or do you think there's more pain to come?
I think the valuations are attractive, but for the stocks to move up substantially, a lot more needs to be done. So think of it this way, right? Where is the earnings trajectory increasing? In those small and mid-cap stocks where CapEx is going their way, where they're getting the gain of the dollar because of what they're exporting, where they're getting a lot of, capex coming in from the power industry, which is of US giving orders into India, again linked to the AI chain. That's the space where you're seeing the earnings momentum growth being 25, 30% or even higher. In the case of IT companies, what we're saying is the dollar will, they would gain on the dollar. There's always been an issue on H-1B visas, and that will be something which will exist for a long period of time. You're getting, I think you're getting into a boxing match, you're getting into a battle one after the other. In such an environment, why should an investor look to be equal weight or overweight the IT sector for the short or medium term when AI as a basket, as digital did to them, is going to question their revenue growth? If earlier the revenue growth was 10 to 12%, whether to 6 to 8%, it may not go down to zero. So obviously there will be a valuation which you want to look at, because these are very high return on capital employed companies, high dividend yield stories, very robust companies. But as far as stock market is concerned, I think the IT sector, for us would be an underweight call. How much underweight is the question? But yes, there is valuation, but no triggers which we can see in the foreseeable future.
Okay. Well, so avoid that bucket. But the other one is the interesting one. And Vinay, I want your view here. But I just want to get in my colleague Varsha to give us what one of the brokers, which is Citi, is speaking about speaking about the electrical equipment space. And I believe they've initiated some coverage on 3 or 4 names out there, Varsha.
Yes, absolutely. So Citi has initiated coverage on Hitachi Energy with target price of 46,700, then GVTND and also CG Power, and they've maintained their neutral on Siemens Energy. Now let's see what are the key reasons. For Hitachi Energy, this is seen as a leader when it comes to HV and HVDC. For GE Vernova TND is expected to benefit from strong HVDC opportunity and export exposure. And for CG Power, considering it has diversified exposure across transmission semiconductors. Siemens Energy, if you see, they've maintained their stance neutral as limited near-term HVDC plays expected. Now onto the renewable penetration, the data centers is expected to drive $15 trillion global T&D capex from FY25 to 50. Renewable is expected to account for 80% of future capacity additions, and a strong export opportunity is emerging for Indian manufacturers according to Citi. And HVDC, this is the current key topic when it comes to the India electricals. HVDC is alone seen as 1.6 lakh crore OEM opportunity, and hence T&D stocks have already re-rated, but further upside is possible according to Citi. So Citi is bullish when it comes to India electrical, considering the HVDC opportunity.
Okay, thanks for that, and thanks for bringing that, Varsha. Vinay, it seems to be a clear and present opportunity. Valuations may be a pickle with a few. How do you think about this space?
So, let me slow down and go back to what's working in the world, right? If you look at the large cap space globally, driven by AI, if you look at what's happening in Korea, you look at what's happening in Taiwan, clearly the AI hyperscalers, the rate of growth of the earnings which came out for even NVIDIA, they all have been very, very robust. Very, very robust means north of 50 to 60%, much higher in countries like Korea and Taiwan. So the earnings are growing there. The capex is increasing there. At one time, the Magnificent Seven spent a capex of about $600 or $650 billion last year. Now we're talking about the capex spend on AI being close to $950 to $1 trillion. That capex is going to come. Once it comes, if you break that capex up based on our analysts, just taking a ratio of 70-30, 70% going to hyperscalers, 30% of that chunk, or about $300 billion, comes all the way, all the way coming into transmission equipment, into power equipment, into data equipment, into infrastructure equipment, into cables. Now, you got to look at the space where India is spending money, increasing their capex in the country and selling it to the rest of the world. And there are many companies, you mentioned one sector, which was industrial transmission. There's another sector in generation. There's another space in pipes. There's another space in hot boxes. There's another space in air blade. So there is a big precision equipment space which is gaining substantially as far as AI infrastructure is concerned. And that's what I meant. When you were talking to me earlier about IT, where rate of growth of earnings could be 8 to 10%. Here, the rate of growth of earnings, because they've got order books, some of them of 10 to 11 years. Compared to the last year's revenue book, have order books which will lead to profit growth of 40 to 50%. That's really the space to look at as far as we are concerned.
Wow. Okay. Vinay, such a pleasure talking to you. Thanks so much for joining in and the takeaway, the key takeaway, Tamanna, for me from this conversation with Vinay. He's saying this is the best move that can be done in the near term for attracting flows and showing the rupee and more from the government side.
Yes, you're seeing that in the way the markets are reacting as well. Just a quick look at the markets before we wrap up the show. And from the lows, that's definitely a fair amount of a climb. 23,446 now on the Nifty. Let's see if it sustains. And we're, of course, keeping a close watch on when the details are out of what this ordinance looks like. That's all the time we have on India Market Open. From Neeraj, me and the team that put the show together, thank you so much for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT,
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in what.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me very shortly will be Mahima Vachajani, and we also have Kush Bora in the studio. So we will start taking all your stock-related queries, and do start sending them on the numbers that are flashing on the top of your screen. You can also call us, speak to our guest on those stock-related queries as well, and the number and the landline number for that is flashing on the top of the screen as well. But as we look at the markets, it's been a good start at this point of time, because we've seen a recovery from the lows, and we're now trending in the green, up almost 17 points above that 23,400 mark. It's been a crucial level that we continue to monitor at this point of time, and hopefully able to sustain. Now, we saw a recovery in the second half yesterday, seeing a similar one today after the implied open and a start in the red by almost 100-150 points. So when you look at the heat map, you will see pressure continuing on stocks like TCS, Infosys, amongst others. So the IT pack continues to be in a downtrend. Trend, Power Grid are some of the other names that are also down in trade today, but you're seeing a lot more green compared to the same time yesterday. You're seeing Eternal being the top Nifty gainer, up almost 4.5%. You're also seeing the other stocks like Adani Enterprises, Titan, SBI are also doing well in trade today. The sectoral heat map also will give you that perspective, where of course IT continues to be down, so the second consecutive day, and makes it a very important session if we can see some revival possibly in the second half. And if that that happens and goes along with what we've seen on the IT index as well. So look at the sectoral heat map very quickly again, if we can pull that up. And that continues to be the big loser, down 0.5 though, much less than the 5% downtick we saw on the index yesterday. But on the gainer side, you are seeing some good momentum on a bunch of indices, and right now most of them in the green. The advanced decline ratio also very important right now, because you've seen a broader market recoveries at this point of time, both in the small caps and the mid caps. So the advanced decline ratio is clearly showing you that trend. We came very close at one point of time, and then a clear up move. So almost an 1800 stocks advancing, almost a two and a half times favor in the advances. And the BSC 500 also shows you that as well. On terms of individual movers yesterday, all out in terms of the IT names today. Rajesh Export is the big story, and we've discussed that quite a bit in today's morning show as well, down 5%. Avanti Feeds down 4.5%. So is Delta Corp and Zensar Tech, while you're seeing MMTC, JBM Auto up 5.5%. Possibly, they had an exchange filing yesterday also in terms of the May sales data. And it's been a good number, but the Delhi policy yesterday launched by the cabinet also could be another key trigger that's leading to momentum on Olectra Green Tech as well. But as mentioned, we have Kush Bora, founder of kushbora.com, in the studio on the technicals. Let me also welcome in Shaina Mukaddam, independent market expert on the fundamental side of things. Both of you, thanks so much for joining in. Let me go ahead and start taking those stock related queries now as well. And Biswajit from Kolkata has written to us on WhatsApp. He wants to buy into some of these AC manufacturing companies, looking at the steep correction that they have on stocks like Voltas, Blue Star, and asking if Blue Star is one of the good candidates amongst those for the next 2 years or so. Kush, I'll also come to you, but on this one, China, very good morning to you. Would you recommend it's a good time to look at these companies, a lot riding on in Q1 for earnings?
Yeah, see, actually, Blue Star is slightly expensive, but at the same time, I think if you're a long-term investor, yes, you could look to buy Blue Star. but you have to hold it for the longer term because we have to see how the monsoons will turn out now. And I think the summer season is more or less over. So one will have to see. Also, they have some bit of problems in terms of their, execution in Middle East because of the war that's going on, and some bit of problems because of the cost increases. So I think raw material price increase. But all these things should not really impact their long-term performance. So if you're a long-term investor, yes, you can look to add at any depths.
Got that view, and Kush also, because we've seen it's a very different year in terms of earnings, but on the charts, anything that suggests, and we've seen the Amber Enterprises, EPAC Durables, all these AC manufacturing companies not do well in this quarter. Any view on the charts?
So I'd be a little cautious from a medium to a long-term perspective. Yes, there is some value emerging, especially on Blue Star, because this one's had a good run. It's now consolidating. If you take the long-term, moves on this one, this has now come close to, I think, about 50% retracement, of the rally that it had a while ago. So from that perspective, I think, this is a good accumulation zone. My only suggestion would be don't expect an immediate momentum or an uptrend. That seems to be missing in a lot of these names. Voltas, for now, I would avoid.
Avoid is what Kush recommends on Voltas, but let's go across and take our first caller for today, and this one's from Hyderabad, and Murli has a stock query for us. Murli, very good morning to you. Welcome to the show. What's the query?
Yeah, good morning. Good morning to everybody. This question is to my favorite pusher on Zen Technologies. I've been holding it for the last 2 years. I have about 10 shares remaining. I sold few when it was about 2,000.
Okay.
So should I hold it for another quarter, 1 year, so that it reaches high?
Got it, Murli. Well, Kush, of course, you heard the queries. Zentech, it's been a volatile counter yet again, but would you recommend him to exit?
I didn't hear anything after he's my favorite.
He's a favorite.
I'm kidding. Murli, you're awesome. Thank you so much for those kind words, and what a way to start the show, right? So this has been fantastic right off the bat. I will tell you one thing. You've chosen a good stock. Now, the reason I say that is because when we do our analysis and when we scan for our stocks, Zentech actually did pop on my radar for the last couple of sessions. The only reason I didn't suggest a trade on it yet because it was close to resistance levels. So on that front, kudos to you. You've chosen the right stock. From a near-term perspective, also the stock is actually starting to, like I said, break some resistance levels. Volumes very healthy on this one. So if you have a position, you could well continue to hold. If not, I would suggest, yes, you should buy, but keep a positional stop near the 1730, 1725 zone. That's the erstwhile resistance. Now will act as a support. So there's a good possibility that in the near term, momentum building up indicators also positive. The stock could well hit 1970. Plus, if that is taken out, about 2150 levels also. So like I said, you've chosen the right stock. Keep your stop losses, but don't let go of this early. Keep trailing your stop losses and ride this wave.
Got that view, and hopefully that answers your question as well as Murli. But let's go across, take another caller now from Andhra Pradesh. And Bharat has a stock query for us. Bharat, very good morning to you. What's your query?
Good morning, sir. I am holding 60 shares of Aditya Infotech at the price of 3,400. I am waiting for 3 months view. I will go to Kush Bohra, sir.
Okay, Kush, this stock has been actually a rank outperformer, right? Since its IPO, I think one of that moves doubled 2x from that price. What's your view on the stock now?
Sure. Appreciate Bharat directing the query towards me. Why now?
Yeah.
Why at 3,400? I mean, I understand कि momentum था और उस हिसाब से आपने ले लिया, but you've bought it at very elevated levels, I'm afraid, Bharat here. Even on the weekly setup, daily setup, this is massively overheated. My honest suggestion would be to move out of it right now. With the momentum, it could well go to 35, 50 odd levels also. But, the overheating on multiple time frames doesn't really give me the comfort to enter at these levels. Luckily for you, the stock is very close to your buying price. So even if you exit now, you'll be incurring a minuscule loss plus, the transaction charges. My suggestion, exit right now. There is a gap around the 2800, 2850 zone. If and when the stock sees that profit booking decline, that's when you're better off entering. So for now, you're better off exiting.
It's been a strong mover, up 25% this week itself, 100% in just the last 3 months. So hopefully Bharat answers your question. Next one's coming in from Sunny from Karnataka. He's holding shares of Abbott India, bought at roughly around 29,355. And China, he's holding on to 11 shares, asking if he can add a few more right now and average down. Would you recommend that?
Abbott India should come out with, for the year, they should do pretty well, actually. I haven't tracked the latest numbers, actually, which they came out in the last quarter. But I think overall, being an MNC, and it has corrected a bit in the last couple of months. I would say from here on, valuations also will start looking a bit better. And I would look to hold it for now and keep it if you're a long-term investor, because Abbott India, the parent company, is pretty strong with a lot of new products that they're launching, also in India. So I would hold it for the long term.
Kush, also the next one coming in from Ramesh on Suzlon. He's holding 955 shares, bought at 61. Asking if, what he should do at the current juncture, because it's in a revival from that lows, and I think we've asked you multiple times on it. Is that rally here to sustain?
Revival is the right word. It has actually seen, a good sharp uptick from those 37, 38 levels, in the recent past. The good thing is that it is sustaining those levels, right? I mean, it's not really seen a big follow through after that, but 52, 51 is where the 200-day moving average is, the 20-day moving average near 53. So it's comfortably sustaining above these levels. Also, if you just put it in terms of relative strength, when the market is correcting, the stock actually consolidating with a positive bias, you take that. So my suggestion here would be continue holding on to this. Your buy price is slightly elevated and that's a bit of a pain, but with the 200-day moving average at 50 to 51, that zone, keep your stop losses around that level, continue to hold. Once I think the market stabilizes or gains, I think the stock will also start its up move from here on, and you could see levels of 61 and then perhaps 66 plus kind of level. So hold, stop loss around the 51, 52 zone.
Got that view, but let's go across and take another caller now from Hyderabad. And Ajay has a stock query for us. Ajay, very good morning to you. What's your query?
Yeah, good morning, sir.
Good morning, Ajay. Go ahead.
I want both technical and fundamental analysis on NLC India for short-term purpose.
Okay, short term. And you are holding the shares. I think you bought it very recently. Is that correct?
Just now I bought, sir. Whenever I am buying, immediately the stock is going down, whatever the stock is.
Well, Ajay, it's an unfortunate story for quite a bit of us. But let me go across to Shaina first. Shaina, on NLC India. Would you recommend it's a good time to hold the stock now?
Well, I think so, because while in terms of valuation, the stock has moved up a bit in the last 3 months, and to an extent, it is starting to look fair priced. But the capacity addition that they are making in lignite, the tie-up that they have got with RVNL, I think these are big positives in their renewable energy push. And I think this will play out well if you look at the next 2 to 3 years. In terms of pure valuation, it's about just 10 times EV to EBITDA 1 year forward, which is not expensive in my view, even despite the stock having run up. So I would say hold it, but if you want to add, then you can add it at lower levels.
Got that view, but let's go across and take another question now. And this one's coming in on Sun Pharma. Kush, viewers holding 27 shares, bought at roughly around 1844, and he wants to know, and this is Albi, he wants to know what he should do for the next 6 months. I think because it's done a very big acquisition, fundamentals suggest that it might take some time to digest. Is that visible on the charts?
Very much so. In fact, if you see, the stock's actually broadly been in that 1870, 1850 zone on the upside, and then about 1600 on the downside. Right now, it's closer to that upper end of the range and seeing some selling pressure, right? But given that the buy price is not too far away from here, my suggestion is continue to hold, because the volumes on the downside seem to be waning off a little bit. The momentum also starting to slow down a little bit. So maybe, the profit booking from 1900 odd levels is now perhaps coming to, an intermediate end. So that's why my suggestion would be to hold. Plus, it's got a horizon of 6 months. So that gives ample time for a trading position and a trading stock to actually move higher. So continue to hold. Positional stop on this one, I would suggest close to the 1725 mark.
Okay, all right. We've got Bharti who's calling us from Bengaluru. Bharti, a very good morning to you. Go ahead, ask your question.
Hi, very good morning to all of you. Would like to let you know that I'm a regular viewer of your channel and the morning show. So yeah, I want to ask my query to Kush on Shriram Properties. So I have recently started tracking this counter, And I want to know the long-term view. Should I be stocking up this share because I've just bought a small quantity as of now, but from some information and some technical view, I gather that this could see a good upside. So would really appreciate some long-term analysis on this.
All right, Bharti, first of all, thank you so much, for being our regular viewer and a loyal viewer as well. Kush, this question is specifically for you. If I'm not wrong, the stock is trading above its all moving averages, right?
We have two technical guests on the show now.
No, pretty soon probably we'll be exchanging roles, right? I mean, you and I can host and she'll be the technical expert. Welcome to the bandwagon, by the way. So, no, you're absolutely right on that, where the stock is trading above all the key averages in terms of the 50, the 200, the 20. So, all of those averages are being, held on to. Oh, by the way, before that, Bharti, once again, thank you for, directing the query towards me. This is a bit of a curious stock, by the way, because it's had a massive fall from those higher levels of 120, 130, 150 odd, and it's not been able to recover in a meaningful way. You've had sell-offs repeatedly in this stock. Right now, by the way, the texture actually looks very good. We've seen regular accumulation in the last 2.5 months on the stock, so the tide seems to be turning. My key level on this one to watch would be 96, 97, that zone. If that is taken out, the last few months of supply pressure will be exhausted and then the stock could move higher. So in terms of identifying the stock, yes, it's the right one. The entry price, that is also right. Just watch for 96, 97 levels to be taken out for the stock to move towards 110 and higher levels. Like I always do, positional stop I would suggest on this one, close to the 84 mark.
All right, okay, so that's the view on Shriram Properties. I think we've got Vikram also, who's calling us from Bengaluru. Vikram, a very good morning to you. Go ahead, ask your question.
Hey, good morning, Mahima, and good morning to the panelists. My question is around Wellspun Corp Limited. I have 100 units of this, bought at 1330. It was a recent purchase. I see the PE and the PEG ratio and the book value all are pretty much good in numbers. So I want to know, is this a stock that I can continuing to accumulate for the next 1 year in a SIP mode? Or is this something that has already seen a run-up? Because from March, I see there is a steep rise which has happened on this one. So I need a view for probably 6 months to 1 year from an accumulation standpoint.
So then, do you want a technical view or a fundamental view?
Technical view.
All right, okay. I'll take this up with Kush then again. Kush, what's the view like on the charts for Wellspun Corp?
You want to take a guess?
Go ahead.
No, a very interesting query, by the way, by Vikram. I'll tell you why. Because when he bought the stock and all the factors that he mentioned were fundamental, right? But because his view is relatively shorter term, he perhaps wants a technical. So I like this. This is a mixture of the fundamental and the technical views. My suggestion would be to either exit it right now or at least keep a tight trailing stop loss near the 1375 mark. Two reasons. One, on the weekly setup, it's actually already into overheated zones, and on the daily setup, it is seeing negative RSI divergences, both of which are indicators of at least some partial profit booking or at least the uptrend from a very near term coming to a close. The structure remains positive as long as the stock holds above that 1200, 1250 zone. So the structure is positive, but you might not want to exit at a loss or maybe close to those levels. So my suggestion would be 1350, 1360 odd levels should be your trailing stop loss. If it falls around those levels, you should exit. But like I said, the broader structure remains positive.
Got that view, but let's also take a quick view on the BSE F&O setup as well. The Sensex, as we've highlighted today, has continued to be volatile in that sense, but much better picture compared to yesterday. In terms of what we've seen, Forces, Trent, our stocks that are down in trade today, seeing some positive move on Eternal, down up almost 4.5% now as we speak. But in terms of individual movers that are buzzing in trade today, in terms of the longs build up, you're seeing stocks like Voltas after a really long time seeing build up of longs, and I think we had a query also on Blue Star which we just solved. So that counter is doing well. Nippon Life yet again continues to see longs being built up on this particular counter. When you also look at the other set of stocks that are in focus on short coverings, you're seeing Hitachi Energy and move with rigor today. You also have a note on from Citi actually, which have put a target price of 46,000 on this counter. And Force Motors seeing buying from the lower levels yet again after a weakish picture for the month of May. I think we have a query also, so we'll take that with China. In terms of the longs being unwinded, sale continues to be on investors' radar. So is Bandhan Bank. And finally, what we've seen in terms of strong new stocks which are seeing build-up of shorts, Trent as well as Nalco are a couple of those counters that continue to be in focus as well. But let's go across to our next caller from Andhra Pradesh, and Lakshmikant has a stock query for us. Lakshmikant, very good morning to you. What's your query?
Good morning. I have a couple of queries actually to Kush Bora. The firstly and most importantly, Kush, would you be considering changing your timing during the India market open, because with schools opening around the corner, we'll not be able to get your views on all the stocks. And seriously, you have been really impressive with all the stock related things. And coming back, my stock query is your weekly pick, Shilpa Medicare. I bought it at 502.55 with 25 shares. So just want to check with you till what level can I hold this stock?
Got it. Well, Lakshmikant, we do try to bring him as early as possible. So I think an hour in the studio is not enough now, Kush. But what's your view on for Lakshmikant on this stock?
We'll have to record this and send it to everyone, who's probably going to take that decision. But I would absolutely love, with all this kind of, love and appreciation. Why wouldn't I? So, valid input. Let's see if they, actually seriously consider that. But I absolutely love, how you structured the entire compliment as well. So thank you so much for that. And I'm so glad to see that, the weekly pick positions are being, taken, considered. You'll recall, Lakshmikant, that 525 was the first target on Shilpa Medicare, and the day we discussed it on Monday, it went on and hit that. Even now in a market like this, it's holding. So the second target for this one is 550. No reason for you to believe, or me to believe rather, that it will not go and hit that target. So you should absolutely continue holding on to it. But how I typically suggest riding momentum is to book partially and hold the rest of the quantity with trailing stop losses. So even at 550, my suggestion would be book about 50 to 70% and then still hold the rest. If the momentum persists, you could actually see higher gains. So thank you so much for again those kind words for that position. Congratulations on that. And 550 is the level that you should watch for on the upside.
Got that view, Kush. But let's start a rapid fire round in this edition of the show now. China as well as Kush, the drill. First question, China, coming to you. For the long term, if either of these stocks are good for that, Apollo Hospitals, MTAR or Sterlite Tech, all three have been giving good returns. But for now, what's a good long-term bet from either of those?
Oh my God, such a difficult question. All three are great stocks if you're holding it for a 2 to 3 year period. So I don't want to take a pick. I will just divide among all the three. One third, and be invested for the long term.
I think you'll have to wait. I don't know where Sterlite Tech, if we showed that, if it's again on upper circuit yesterday.
Exactly, yeah.
So you'll have to wait for that counter. Let's pull up Sterlite Tech, and there you go. It's in another stratosphere altogether.
Yeah, absolutely. The next one is on Chennai Petrochem. Jaideep from Mumbai has bought 500 shares at levels of 1075. Says it's gone up significantly in the 2 days. Book profits. Continue to hold, Kush.
Continue to hold. Stop loss at 1150.
Good. RBL Bank bought at 261 China by our viewer Somasekhar. Wants to know if he should continue to hold his 300 shares.
Yeah, he should hold. Continue to hold.
Yeah, the next one is on HFCL. 100 shares bought at the levels of 125. K Guru from Chennai wants to know if he can book profits or wait on this one. Another counter which is not stopping in terms of its upward movement, but also a very volatile one if you check the history, Kush.
On steroids, this one too. So I would suggest definitely book out 50% and you can still hold the rest with a trailing stop loss at about 185, 190.
Got the other counter which is not on steroid, that's Indian Hotels over the last year or so in terms of stock price performance only. Our viewer wants to know that he's been holding shares at 704 for the last 1 year, China. Should he add more now is his question.
Well, I would wait to add more, continue holding because these are long-term stories and somewhere close to around 630, 640 type of levels, which is slightly lower.
Okay, the next one is on Sirma SGS. Our viewer Kuldeep Rathod wants to know whether to hold or sell. He bought it at 1112. Kush?
You can hold, but it's getting overheated. So I would suggest book partially, hold the rest with a trailing stop loss at about 1175.
Bajaj Housing Finance bought by Murthy from Vizag. In China, he's sitting on a loss of almost 12% on this counter. Should he continue to hold for the long term?
I would say it is better to switch. So switch at least 50% you move out.
Okay, the next one is for you, Kush. Nippon AMC or Aditya Birla AMC. Which one is looking better on the charts? Prashant from Bengaluru wants to know.
I don't think this is fair because ये दोनों stock मैंने recommend किए हुए हैं, ठीक है, on the channel within this space. So I continue to like both of them. But if I were to give the pecking order, it would be Nippon.
Next one's coming on Netweb Tech. Kush, a long-term view is what G. Kumar wants to know on the stock.
Not a bad setup at all. Does he have a position already?
No, not yet.
Okay, no, then you might want to wait, buy closer to 46.50 odd levels.
Okay, the next one is on Gokuldas Exports. Is this a good time to buy, Kush?
No, not really. Stock not doing much. Avoid.
Next one is on NHPC. If it's a good time to enter for the long term is what Sumedh is asking. Would you recommend that, Shaina?
I think better to wait for the stock to stabilize because of the recent OFS. But yes, you can add at tips. Yeah.
Okay, Bajaj Auto bought 100 shares at the levels of 10,580. Shaina, good time to enter right now?
Yes, I would think it's like an evergreen stock. Any dip that you get, you can add.
Got it. The next one's on Acme Solar, bought by Raghvendra at 317. He's holding 800 shares. Kush, is it a good time to continue holding or book out?
No, you can continue to hold. Very healthy volume accumulations on this one. Stop loss at about 315 zone.
Okay, Bank of India bought at the levels of 144. 200 shares is what Venkat from Chennai is holding. What should he do, Kush?
Keep a stop loss at 133 and continue to hold.
All right, okay, that brings us to the end of this first rapid fire round. But viewers, of course, it's time to slip into a very, very short break. But we'll definitely answer more queries on the other side, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company.
Welcome back. You're watching Ask Profit. But before we go ahead with the stock-related queries, let's head to Citi's flagship India conference, where Citi India CEO K. Balasubramaniam and Jane Fraser, the CEO at Citigroup, are speaking in. Let's listen in.
India is very much intact. He gave me a couple of very clear messages in terms of the commitment to the reform agenda continuing, the important role that the private sector plays, and the support that he will certainly be continuing to give different industries going forward. We also talked about the huge transformations that's occurred, digitization in particular, what's going on in AI, the role that the big data center builds that are going on here, and the large investments that have been made by Google, Microsoft, AWS. We always talk Foxconn, but there's a lot of other big investments that are happening on the AI infrastructure. And for a country with so much talent in the technology space, there's going to be some pretty exciting things ahead in that application layer, as well as the benefits of the investment. We talked about energy security and a lot of the things the government is doing to help manage through the challenges that have been faced from the Middle East war that's going on, and the situation between US and the Gulf states and Iran. So a very wide-ranging conversation. But Bala, you were there too. What were some of your takeaways?
Well, that was, of course, the management of Citi, both global and India, and we'll keep getting you those perspectives and important key takeaways from the chat as well. But let's go across and take another question now. This one's coming on Mazgon Doc from Kaushik Rana from Baroda, and he's holding shares at 2883. Question, he's holding 10 of them, so currently sitting on loss. Asking a technical view to us.
So the setup's not great in the sense, it's got that spurt, and I think he was perhaps, he got stuck at the higher end of that, price range. My suggestion, you can hold, but only because the stock is still respecting that 2350, 2400 support zone. There isn't enough momentum or volume traction to suggest that it'll go, to his buy price anytime soon. But with the kind of consolidation happening, continue to hold. Keep your stop losses near 2375, 2400 zones.
Okay, all right. So that's the view coming on Mazagon Doc. The next one that we have is on CG Power. This is again a technical query. So Kush, our viewer wants to know the entry price for this one. Again, this is one of those counters which is no stopping per se. But do you think it makes sense to enter now?
This was also, by the way, a pick that I had shared just yesterday, in fact, for 930 and 945 kind of levels. You'll recall, right? 885 stop loss. It's now at the upper end of that target 949, 950. That's the upper end. So my suggestion would be, if you have a position, you should actually book out. If you don't buy now. Wait for a decline, and that decline should come close to the 900, 910 zone for you to get a favorable risk-reward ratio. So the structure is largely positive. Close to the upper end of the target, upper end of the second target. So I would suggest hold, buy close to 900, 915.
Got that view. We put out this query on Force Motors, which is up 5% today. Actually, in the FNO setup, we highlighted the stock, and Vedant from Chandigarh is actually asking if it's the right time to enter China. What do you make of this counter China? Because it has been volatile, but the May figures were slightly more disappointing. What's the longer term view on Force Motors?
I don't think this is the right time to add, because there's a lot of negativity going on because of the disappointing numbers that they have shown in terms of volumes. I would still wait for buying it, and buy it at lower levels. I would see better levels to buy it would be close to about 17,500, not at current levels. So it's an avoid.
All Right, so that's the view coming in on Force Motors. The next one is on Idea Forge. Our viewer Chandrasekhar is holding around 200 shares, bought at the levels of 710. He wants to know whether he can continue to hold from a long-term perspective or book profits. This one, of course, today is locked in upper circuit. But China, with the fundraise, with the news coming out, that the there could be approximately $2 billion worth of drone orders that these companies could receive. Do you think from a long-term perspective, this is a good hold?
Yeah, of course, it has been a one-way up for the stock. And, even after the IPO, the stock has been continuously moving because they're showing very good numbers. And the order book position is also pretty strong. So they have got an order book close to about, in fact, some of the orders that they're getting, it's taking it into the highest orders that they've actually got over a period of time. So I would say continue to hold but average at lower levels because valuations for all these stocks are on the higher side, though they will do well in the longer term. So buy it on dips.
Okay, all right. We've got, I think, Pawan, who's calling us from New Delhi. Pawan, a very good morning to you. What's your query about?
Good morning. I hold a Quality Wall share. I got it from the demerger of Hindustan Unilever.
Yeah.
So I got at a price of 25. I added to that, and my buying price is 25, and I hold 2,000 shares. I just wanted to know whether it is the right time to add more of the shares of that, or should I wait for the dips?
Okay, all right. Got your question, Pawan. What is the time horizon that you're looking at, by the way?
I can actually hold it for next 4-5 years.
Next 4-5 years. Okay, great. Then I'll take this up with China. China, what do you think about Quality Walls? Considering that, HUL had demerged this one, considering the capex versus, it did not contribute much towards the revenue, just a 2 to 3% to their overall top line. Do you think it's a good hold for the next 4 to 5 years?
Well, yeah, I think there will be M&A activity, so that could take it up. But at the same time, I think in pure valuation, taking it at current price. So they did a turnover close to at least what has been reported of around 2,300 crores. And the market cap over here is close to about 8,000 plus crores. So to an extent, the upside for the shorter term will be capped. So if you're looking at the short term, I think better not to add. Keep adding it for the longer term at dips because then it gives you that upside in terms of any M&A activity that will happen. Because I think eventually that is what is going to in the ice cream space.
Okay, all right. So that's the view on Quality Walls. But the next one that we have is on Whirlpool. Saket from Delhi is holding around 886 shares, bought at the levels of 950. Wants to know as to what should be the next course of action for this one. Huge losses that he's already sitting at. Kush, any view on the charts?
Yeah, you're better off exiting. I mean, the stock's actually not really gone anywhere. In fact, it slid lower and is yet again testing those Feb lows of about 760, 775. Nothing to write home about. There have been accumulations, but that's also gotten sold into. So you might want to exit at the current levels on Whirlpool.
Got the view, Kush. The next one that's coming in now, it's on Tenneco Clean Air Solutions. And our viewer wants to know if it's a good time to enter at this point of time. Shaina, would you recommend that? It's post-listing, it has given decent returns to investors, and I think one of the recent products also did very well, which was the Da Vinci suspension, I think. But any view on the stock now?
Well, it's done pretty well in terms of numbers, if you see the March quarter numbers. So to an extent that, yes, it's a hold. I would say hold it, but keep a stop loss because it's a recent issue. Keep a stop loss close to about 550.
Okay, all right. The next one that we have, this is from Satyan, who's asking about a lot of stocks as usual. But I will choose to take one of these. I'll take Ajanta Pharma from the list of stocks that he sent us. Satyan, if you're watching this, don't send us a list, send us one question per day. He wants to enter Ajanta Pharma right now. Do you think it's the right way to approach the counter?
He can. In fact, Ajanta Pharma, along with Senoris, are those couple of stocks in the pharma space that we've said that, make sense. Now, this one's had a sharp round of profit booking, but the volumes on the downside are now starting to wane off. The stock is respecting its 50-day moving average and attempting a rebound. So, yes, with that profit booking round over after a big rally, I think this is, a good entry point. My suggestion, yes, you can add, keep your stop losses close to the 27.75 mark.
Got that view, but let's go across and take another query now from Bengaluru. And Chaitra has a stock query for us. Chaitra, very good morning to you. What's your query?
Very good morning to all of you, sir. My question is like quality power. I wanted to enter the quality power, so I wanted to ask the Kushbora sir. I will watch your program regularly, but I'll try on Thursdays to talk to Kushbora sir. It is very difficult to get the call connected to the Thursday. So, yes, sir. I wanted to know his view on this quality power and what is the entry price and what is the long-term and short-term view on this.
Got that view. Kush, on quality power, is it a good time to enter?
That's so sweet of her, right? Trying to come in on Thursday just for me to have answered a query. Maybe we can, along with increasing the timing on the market show, come around.
Just put a chair here for you. We can do that.
Oh, how sweet is that? How sweet is that? But once again, thank you so much. That is so kind of you, Chaitra. Quality power is not a bad stock. There has been a sharp, downtick on this one. But again, the volumes on the downside are now starting to thin. Remember, it had a massive run-up. It went from about, 600 levels to 1400 plus in a very short span of time. Now it is consolidating. So, yes, I think you've identified it correctly. I would suggest you can start accumulating it because the momentum hasn't really picked up yet. But don't add a big quantity. So, start accumulating right now. You can keep your stop losses near the 950, 975 zone. Wait for a positional bet. And how I typically play this is when the stock starts to move higher, you add even more. So yes, rightly identified, right price point, stop loss at 950, 975, good accumulation zone.
Got that view, but so that's on quality power at this point of time. The next question, that's coming in now, it's on it's from Bhairav on Vikram Solar. He's holding 850 shares of the company, bought at 190 and wants to know a 3-year view. What would you recommend here, Shaina?
Yeah, I think it's in a good segment. They have got a good order book position. So I would say you can hold for the medium to longer term. You can keep a stop loss close to about 200.
Okay, all right. The next one is on Trent. Our viewer N. Shekhar wants to know as to why has this counter been under pressure. He's got around 50 shares that he bought some months ago at the levels of 4385. What should I do is what he's asking. Kush, I'll come to you on this one. Do you think in the near future it can come back to these levels? Because I mean, we know people who bought it at the peaks as well, but this is also a bad level to enter at.
You tell me. You track this more closely than I do from a fundamental lens. So, no, but from a technical standpoint, there are a lot of hangovers, right? You rightly said that the stock has seen a beating down for a while now. Every attempt has fizzled out around the 200-day moving average now since you're starting to track technicals also. So unless that level is taken out, and right now that level comes in at about 2900, unless that is taken out in a convincing way, the stock sustains above that for a few days. You just don't want it to just touch and go. So unless that happens, I think a reversal is perhaps a little difficult. So you've bought it at slightly elevated levels, stock consolidating. I wouldn't really recommend selling out at at these levels. Perhaps 2600 is a level where you can keep your stop losses and hold. But from a very near-term perspective, a big bump up, a little unlikely.
Got that view. I think today is one of those days, the bonus adjustment day. I think bonus, that's why you're seeing a new level today. So don't get alarmed by that, viewers. It's not fallen yet again to that level because there is that adjustment for bonus today. But the next stock, Kush, and it's actually a stock we don't discuss about, Yash High Voltage. Charan from Bangalore wants to know, it's a 2,000 crore market cap company and he wants to buy into this counter. He wants the long-term view, but I don't think, Shaina might be covering it. But first, I'll go to you, then probably check with Shaina as well.
Very honestly, this is the first time I'm hearing about it.
I think it's also a stock move that just prompted me to check if you would have had a view.
Yeah, and it's actually run up quite a bit. March, the prices were about 400 odd, and then it's just sprung up. Now seeing profit booking. Since I don't track it and the moves are very volatile, my suggestion would be to avoid. At least, I particularly don't hold a very strong view on this one. But if you're just looking for levels, I think a meaningful support on this one comes in very low, close to the 600, 625 mark. But I really wouldn't suggest entering into it.
Okay, all right. The next one that we have is on Gulf Oil Lubricants. Thomas from Kerala is holding around 160 shares that he bought in the last November at around 1200 rupees. Wants to know whether to hold or sell. For the next 1 year, Shaina, what should he do?
Yeah, he can hold it because, the stock has corrected. And unless he's looking at the very short term, if he's looking at the very short term, then or maybe even 6 months, it is better to exit. But otherwise, if he's holding it for the medium to longer term, then he can hold. But otherwise, short term exit.
Well, the next question that's coming in, it's on Sedemac Mechatronics. Again, one of those auto component companies that just flew off post the IPO. And a viewer, Kush actually bought these shares at 1700. So he bought it while it was up. Let's look at the 1 month, 1 year chart also, since listing has done well. But Kush, any view on the charts? I know it's a recent listing, but just basis of the move up almost 26, 27% in the last 1 month itself, any view?
These are the kind of queries we receive when the markets are at an all-time high or in a bubble zone. Yeah. Correct. At least that
we are clearly not in either of those.
We're not, but this is also an indication that the mid and the small cap segment is buzzing so much that we're hearing about stocks that we've never even heard of. So, two things. One, again, I have not tracked this stock. Two, you're right, it's a very recent listing comparatively, so very limited data, so I'll pass. From whatever little data is there, I can tell you that it's right now getting overheated. So if you have a position, you're better off putting your stop losses close to the 22.50 mark. But like I said, I don't really have a very strong or a clear view on this one. Recent listing.
Okay, all right. The next one that we have is coming in on Tata Tech. Lalita from Chennai says she's been holding 300 odd shares at the levels of 1050. She's sitting on a loss right now, but she can hold it for a couple of years, and whether it's worth holding it for a couple of years or not. Shaina, your view on Tata Tech?
Well, see, after that huge dip that we've seen because of expensive valuations, I think the valuations still remain on the upper side. But if she's a long-term investor, the group is good. Long-term potential looks okay. So yes, she can, but otherwise it's better to switch from Tata Tech to some other sector.
Got that view?
And the Tata Group. Why not Tata Group, but some other stock?
Got it. And China, anything in the Tata Group that you specifically like?
Well, we discussed Indian hotels, and which has come down substantially. So if you're a long-term investor, I would prefer a Indian hotels over a Tata Tech for the long-term investor.
Got it. Well, the next one, Kush, coming in on MCX, our viewer Padma from Bangalore is holding 31 shares at an average price of 2925. So currently sitting on a slight loss, but asking if can be held for a little more longer term is what her question is. What would you recommend?
Any time frames mentioned?
2 to 3 years, but it might be very difficult in that sense to give, but any view?
Very clear to hold. Very clear. Yeah, I've been very bullish on MCX, BSC, some of these names, right? I mean, the rest of the capital marketplace, especially the broking ones, not really. But if you look at, the exchanges, if you look at the AMC companies, they've been doing well. And I think the drawdown on MCX was on the back of certain news as well. Plus, it had run up quite a bit. So I think this is fair, profit booking, par for the course, and not too far from her buying price. My suggestion, you can very well continue to hold on to this one. Positional stop close to the 2650 mark, but with a 2 to 3 year horizon, I think you should very comfortably continue holding on to MCX.
Okay, all right. The next one that we have is on MV Photovoltaic. Our viewer, Mahalakshmi from Hyderabad, has bought around 100 shares that she'd bought at the levels of 278. Wants to know from a long-term perspective, can she add more? She's looking at least a time horizon of 2 years. Shaina, your view?
I don't track it. I'll pass.
Okay. Enough data, by the way, on the charts, Kush?
Well, not really, but looks like it broke out above that 300 zone. So if you want to add more, I think that's the level that you can look at.
Got that view. The next question that's coming in now, and this one's on Polycab. Our viewer has bought shares at 6,000 odd rupees, so currently sitting in good profits. Asking if it's a good time to book out or continue to hold. Shaina, what would you recommend?
Well, see, Polycab is expensive. Also, new competition is coming up in over a year's time from Grasim. So I would say that, if you're a long-term investor, it's a stock and you're holding it already, you've made good money on it, you can continue to hold. I wouldn't say that you need to exit the stock because the demand is good, potential is good. So you continue to hold, but don't expect these type of returns that you've got in the last 1 year over the next 1 year. You can hold, and if you want to be safe, you keep a stop loss close to about 9,000.
Okay, all right. The next one that we have is on ICICI Bank. Our viewer's buying price is 1,200 rupees and 150 shares is what Shakib from Guwahati has been holding. Continue to hold for the next 3 years is what he's asking, and possibly targets. I know, China, it would be difficult to give targets for the next 3 years, but from a really long-term perspective, a good hold?
Yeah, it's a good hold. Valuation is just about less than 3 times price to book. So I would say continue to hold.
Got it. The next question, and this one's from Subramaniam from Tamil Nadu. Shaina, he wants to know between BL or Varun Beverages, either of those counters is a good one to enter for the long term?
I would say BL, in my view, is safer compared to Varun Beverages. For the long term, the order book position is very strong. And so I would say that it's a safe company to hold for the long term. Varun Beverages, in my view, is slightly expensive for the shorter term, but they have got good plans going ahead for Africa, expansion in terms of product portfolio into the alco beverage segment. So to that extent, if you're a long-term investor, yes, add it at dips because of valuation being expensive. BL, I would say you could keep adding it even at current levels if you're a long-term investor, but expect moderate returns from both the stocks because valuations are expensive for both.
Okay, all right. The next one is on Zentech. Archer Sachdev is holding 30 shares at the levels of 655. Wants to know whether to sell, hold, maybe buy more from a one-year perspective. Kush, your view on the charts?
Just discuss this, right? I mean, at the
you did? Okay.
Yeah, we did. My suggestion is that yes, you can continue to hold, especially given that the buy price is so low and the stock's now picking up momentum. I would suggest a trailing stop loss, however, close to the 1750, 1775 zone. But yeah, it's building on momentum, so no reason to sell out right now.
We're getting a next question, which is a very topical one on IT. And Raghu from Bengaluru is holding on to TCS. He's not mentioned his buy price, but he's in a loss of 16%, holding on to Wipro also with a 15% loss. He wants to know, Shaina, if he should exit both of these counters, but he again wants to enter in the tech space, so wants to enter Coforge or NetWeb. Firstly, would you recommend selling out TCS, Wipro and buying into these two other counters?
See, at least one of the two I would sell and switch to NetWeb because in terms of potential, I think NetWeb has better potential, a better partner, that will drive growth, semiconductor. It's in a space that is happening also. So tech is really we're not sure whether the growth will come back in terms of revenue. So one of the two he can switch. I would suggest switch from Wipro to NetWeb.
Okay, all right. The next one, I think it's time for a rapid fire round if I'm not wrong. Shaina and Kush, you both know the drill by now, so try to keep your answers as short as possible. Between Britannia and ITC Imami, which one is a better bet right now from a long-term perspective, Shaina?
I would say Britannia.
KRBL Kush bought by Harsha from Hyderabad at 345, asking if it's the right time to enter.
No, not really, but you can hold 325 stop loss.
Okay, the next one is on Hitachi Energy. From a long-term perspective, our viewer Sunita from Hyderabad wants to invest around 1 lakh rupees. Is that the right strategy, Shaina?
Buy it at dips. It's a great stock, great business, but valuations are expensive. Buy it on dips.
Okay.
CSB Bank bought 145 shares at 359 by Anand from Delhi. Shaina, he wants to know if he should continue to hold this counter for some time.
As of now, he can actually hold it if he's holding it for some time. But if he wants to add it, it is better to add it at lower levels because to some extent valuations is slightly on the higher side. Add at only close to about 340 type of levels.
Okay. The next one is on LIC. Arun from Kolkata wants to know as to whether from a short-term perspective, is this a good bet, Kush?
No, avoid.
The next one is Vishnu Prakash Pogale, again a stock that's been very volatile, Kush. Avinash Naidu holds shares at 181, asking if there's any reprieve. I mean, stock's trading at 32, I think. So I don't know what he should do. And stock's down 80% in the last year.
And hitting lower circuits for the last few sessions. So if you get a chance, exit.
Okay, the next one's on KPI Green. From a long-term perspective, is this a good time to enter, Shaina?
He can enter, but better here also again better to add it at dips only. So you can add, but add it at dips because short term looks negative.
But let's quickly actually just cut into Dixon Tech's management. Sunil Vachani is also speaking to NDTV.
70,000 crores worth of investment proposals have been received, and we at Dixon also now are in the process of rolling out a factory for display module, and camera module is being scaled up to almost double of what it was maybe a couple of years back.
What realistically can investors expect in terms of margin at this time? And also there's been a Middle East crisis. Could you also delve on both these points?
Look, I think all of us are aware about the problems that are there in the industry in terms of the, the supply chain getting affected, right? The supplies of memory to this sector is affected, and also the prices have been going up. And because of that, the prices of the finished product has gone up tremendously in the market. And especially in the low to mid end of the segment, where the customers are very, very price sensitive, I think this has had an impact on the demand. But hopefully now with new capacities being added in this particular sector, which of course is going to take time. As you know, these factories take time to build, these capacities take time to build. So it will be, few quarters before the situation normalizes completely. But I think investors should definitely look at the bigger picture. And the bigger picture, as I mentioned, that this journey has just started and there is a long, long way to go. And especially if you look at the discussions that are going on between India and US in relation to the FTA, that represents a huge opportunity for the industry. So as you know, US imports telecom products worth almost $80 billion, right? And India is one country which is gaining huge strength as far as manufacturing of telecom products is concerned. We at Dixon ourselves have scaled up our manufacturing of telecom products tremendously. So there's a massive opportunity coming and we are very excited about it. And I'm sure the investors are also as excited as we are.
What has been the quantum of demand drop or sales drop? Any percentage you would like to give, and what has been the because of the Middle East?
Look, Dixon is the brand behind the brands. So we really are not the right people to answer about, what's the future potential of the demand as such. But what we see, the numbers, overall numbers, that there has been a small degrowth, right? Almost the same numbers as far as the overall volumes are concerned. So that's definitely a bit of a concern. But I feel that over a period of time, these numbers are going to look much more robust once the supply chain issues get sorted out.
What's the status on Vivo JV, and when can we expect it to meaningfully contribute to the revenue?
Again, very difficult to put a date to it, but as I mentioned, that this is under active consideration by the government and we're hopeful of getting the approval soon.
And how the export opportunity is shaping up for the company right now?
Well, I think this is one area that we're hugely excited about, because we believe that the next phase of growth for the industry and for the country, right, as far as electronics manufacturing is concerned, is going to come from exports. And we already see a huge growth in numbers. I mentioned about $40 billion worth of electronic goods getting exported. This is a massive jump. And I think what is extremely encouraging is that now many, many companies across sectors are looking at India, for their sourcing. And the proposed FTA with US and the FTAs that have been concluded with UK, EU are going to play a very, very major role in times to come.
What sort of mobile volume growth could we expect? Because that will be like a major important thing.
Look, I don't have the specific numbers, and honestly, I won't like to answer also about the specific numbers for any company. But as I mentioned, the future is extremely bright. The future is extremely positive because this industry has developed certain capabilities, certain key strengths, which will ensure that India emerges as a global player for these products.
Any segments particularly which could do well, telecom or modules?
Well, we are equally excited about all the segments, but where I see a huge growth coming in the future, as I mentioned, would be the IT hardware, especially the requirements of the data centers. And there we have a partnership with one of the leading Taiwanese companies, which is probably the third largest in the world as far as IT hardware is concerned. So this factory should be up and running in the next few months. And once that is done, we are very confident that we'll be in a good position to cater to the huge requirement of the data centers coming up in the country. It's estimated that the numbers relating to the demand from data centers is going to be as high as almost $40 billion, right? So this is one opportunity as an industry and as a company we are hugely excited about.
Lastly, any particular risk, because the company is expanding now massively, any particular risk which we should be careful on?
Well, for any company which is growing phenomenally, for any industry which is growing phenomenally, there'll be risk on relating to policies, there'll be external risk, and there'll be internal risk of execution. So we have to ensure that we do not take the eyes off the ball, that we're very, very focused as we are. Our management, our leadership under Atul Saurabh is very, very focused on providing the maximum return to our shareholders. And you can be rest assured that we'll be as focused as we were 10 years back or 20 years back.
Thank you so much, Sunil. Thank you for speaking to NDTV Profit. Thank you so much, sir.
Bye-bye.
Well, that was, of course, the management of Dixon Tech speaking at the City India conference. And we keep getting you all these key management conversations as well. But unfortunately, all the time on this edition of Ask Profit, we'll take a lot of your queries at 2 p.m. In the afternoon edition. But Kush, as well as Shaina, thanks so much for joining in and giving us your inputs. Well, all the time, of course, and out of time on this show. But stay tuned, a lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in what
welcome to KYC. This is a show where we try to decode one company at a time, and today we're going to speak to a company that is involved in making billboards and advertisements. So whenever you're going on a highway or traveling on roads in Bombay, Bangalore, etc., you will find big hoardings with advertisements on them. That's exactly what this company does. That's they are responsible for kind of showing these advertisements for you. The company that I'm talking about is Signpost India, and we are going to try to decode the financials, what the company does, etc., and then also speak to Mr. Shripad, who is the MD of Signpost India, who will be joining us very shortly, and asking him a couple of questions. Now, why have we chosen this company? First of all, of course, there's a lot of retail interest that we've been seeing in this company lately. In terms of their overall performance in FY26 has also been very sharp, plus margins have significantly gone up. So we want to understand as to how sustainable are these margins, especially in this competitive environment of advertisement, plus with the advent of social media, how the landscape is changing when it comes to advertisement. FY27, what are the growth targets looking like is something that we would want to know from the company in terms of where the top line and the bottom line goes. Capex and ROC impact, because they've planned a certain amount of Capex, and how will that impact their ROC numbers is something that we would want to understand from the management, because their ROC growth trajectory has been very healthy. The other aspect that we want to, of course, talk to the management about is revenue mix going forward. We'll try to, of course, decode the segments in which their revenue comes in from, but what is going to be the revenue mix going forward? How much of a margin accretion is going to come from that change in revenue mix is also something that we would want to understand from the management. And lastly, they are moving to something called asset light model monetization. What does that mean, and how will again this be beneficial for the company is something that we're going to speak to management about. So these are overall the questions that I would want to know from the management. But before we start doing that, let's try to understand in detail as to what the company exactly does. Now, it's basically a digital out-of-home media and transit art infra company. So basically the signboards, the billboards that you see on the roads, or advertisements that you see on the buses, etc., is exactly what the company does. It specializes in public space communication, transforming urban spaces as a whole. Now, in terms of its presence, it has a strong presence across major cities in India. We'll also tell you as to what that number looks like. 32 plus cities, there you go, across India in terms of its geographical footprint. In terms of the overall percentage, 95% of their DOH media is already on LED and net. They want to achieve that net zero by 2030 commitment is something that the management is aiming at. In terms of the positioning of the company, right now it's amongst the top 3 players nationally. In terms of the company snapshot, around 15,000 plus assets are managed in transit platforms and the other formats as well for the company as of the latest disclosure in their presentation. 1,730 plus active clients is what they already have. They have around 80,000 plus square feet of premium digital panels that they're owning right now, and on which they are, of course, selling out for advertisement. How does the model work exactly? So basically what happens is long leases and ad rights is what they tender. This they can get from government or municipal corporation as well, and then they maintain, advertise infra like digital screens, billboards, etc., and also install them. So that's the entire aspect, and then sell ad spaces to large brands, agencies with monthly or quarterly fees. So that's their main amount of revenue coming in. It monetizes by display, occupancy, asset scale, and price optimization as well. Now, in terms of how the segmental revenue is right now, major share comes from transit ad, that is around 57%. Transit ad is basically the ads that you see on buses, trains, etc. 26% comes from digital ad. Digital ad basically is the ads that has some involvement of graphics, video, etc. on the digital boards that you see. And then conventional form is just a static post. So around 17% of their revenue comes from those static conventional posts. In terms of marquee clients, some of the names that caught my eye in the presentation were Netflix, Amul, DMart, Chroma, etc. that you generally keep seeing while you're riding on Mumbai highways. So these are some of the marquee clients overall on their list. So this is the entire view. Some other names, of course, Big Basket, Hyundai, Sony as well. So these are some of the marquee clients that Signpost has. Now, in terms of where the parameters that we're going to assess for this particular counter go, as always, we're going to take into consideration 8 different parameters. The first one that we're going to analyze is income statement. Then we are going to talk about balance sheet. Cash flow is going to be the next one. Return ratio, so ROA and ROC is something that we're going to assess for the company. Shareholding patterns, street cred, valuations also is something that we're going to look at, and finally the outlook as to what the company's guidance is going forward. So these are the parameters, rating parameters, that we're going to assess one by one. Let's start with the income statement first. Now, it's been a good trajectory of growth for this company, because if you take a look at the 3-year CAGR in terms of where the revenue growth goes, that is a healthy percentage of 22%. EBITDA 3-year CAGR has also been at 33%. Margins have significantly gone up from 19.6% to 25.5%. We'll try to understand as to what has led to this, one, and secondly, how sustainable are margins from here on, whether this 25% kind of range could be maintained or not. Net profit has also been a 26% 3-year CAGR. So healthy growth when it comes to the overall performance in the last 3 years. In terms of Q4 numbers also, overall revenue saw an uptick of 22%, EBITDA an uptick of 33%, and net profit an uptick of around 26 odd percent. And so this is the EBITDA margin that I talked about, right? They've come far away when it comes to their overall EBITDA margins. Q4, of course, was at a much higher level. So we'll try to understand as to where this will ease out and what will be a stable range of margins that the company is aiming at. Moving on to the next one, when it comes to the balance sheet aspect. Overall, their share capital has remained at that 11 crore mark. Reserves have been constantly and steadily rising from 178 crore in FY28 to a 276 crore in FY26. In terms of borrowing, slight increase from that 79 crore mark, but it's at a healthy net debt ratio. So that's not a problem at all when it comes to the long-term borrowing. Cash in bank has significantly reduced in FY26. We'll also try to understand from the management as to how their cash positioning is right now. How are they planning to utilize cash further going forward as well? So this is with regards to where balance sheet goes. Now let's try to take a look at the cash flow statement as well, as to how cash flow from operation metrics looks like, how much that is getting converted to the EBITDA levels. There you go. Flow from cash flow from operations has slightly been on a downward trend. So from a 64 crore in FY25 to a 22 crore in FY26. Now this as compared to the ratio of EBITDA to cash flow from operation. This metric basically means as to how much your EBITDA is kind of getting converted into your cash flow from operation. 77 from a 77% in FY24 to it's gone to 15% in FY26, and this is the one area of concern that I had, and that's why here we have taken a completely conservative approach to cash flow and given it a thumbs down for now. A net cash flow position is also in that range of 7 to 8 odd crores or 6 to 8 odd crores, so not much in terms of where the net cash flow position stands. The next one is return ratio. This one is a very healthy card that you can see, because overall the ROC has been maintained largely on account of on that back of 26 to 27%. Any number above 20% is healthy, but they've done a 27% in 26. Plus the ROC number is also not very bad and on an increasing trend as compared to where it stood in 25. But the stability of this is important. We'll try to understand as to what happened in 25 and what has led to this growth in 26, and going forward in 27, what is the management expecting when it comes to the return ratio. So that's with regards to where the return ratios go. The next one that we are going to talk about is shareholding. Now this one, again, there is of course skin in the game where the promoter holding is concerned, but it has reduced significantly from a 75% in March 24 to a 60% in March 26. That is the kind of trajectory in which promoters have reduced their holding over a period of 3 years. Plus FIs, not much of an interest here, hardly a 0.09% of an interest as far as the March 26 holding goes. DIs have also not shown much interest in this one, just a 0.02% holding. But there's a lot of retail investor interest, from a 24% to a 39.5% is what we've seen. So that's with regards to where the shareholding pattern goes. And in terms of where the street cred goes, last 1 year has been very good for this one, 45% of an uptick in the last 1 year. But 5 years, it's down around 25%. 6 months itself, it's given a return of around 30% to its investors. So this is with regards to where the street cred goes. Let's try to take a look at the valuations also quickly, because not a lot of players are there in this particular listed space. But as far as Bright Outdoor and Yap Digital go, they're the closest peers to Signpost. Bright Outdoor, however, is a very small player, and so is Yap Digital as well. But as compared to both of these valuations, Signpost is trading at a lower EV to EBITDA at that 11 times. Current valuation of EV to EBITDA. So slightly better in terms of where the peers go, in terms of where valuation go. Lastly, in terms of where outlook goes and what management has guided for going forward, they've guided for more than 20% revenue growth in FY27. With regards to where margins go, EBITDA margins should be in that range of 25 to 27% is what they've said. They've done that already in FY26, but we'll try to understand as to how sustainable that is. They've planned strategic capex of 60 to 70 crore. How that will be funded is something that, of course, we'll speak to the management about. And the strategic focus pivots from footprint expansion to yield optimization is something that the management has said. So this is the overall outlook. Now let's take a quick look at the overall ratings for this one. Income statement is a thumbs up. Balance sheet is a neutral rating overall because of just a conservative approach taking into consideration the borrowings. Cash flow has been a thumbs down because the conversion to EBITDA has not been a good metric for them. Plus net cash flow position is also not very strong, and that's why a thumbs down. Return ratio is very healthy for this one. Both ROC and ROE are on a very strong footing. Shareholding pattern, we've given a thumbs down because the promoter shareholding has come down from 75% to almost 60%. Street cred, again, a neutral approach here because the 5-year return is not very attractive, though in the past 1 year the stock has done exceedingly well. Valuations, again, here a neutral approach, considering 11 times EV to EBITDA. We've taken a conservative approach and given it a neutral rating, but the outlook remains very strong. A 20% growth outlook in terms of top line, and strong margins between 25 to 27% is what the management has guided for. So the overall ratings for Signpost comes to 4.5 out of 8. But with that, before we start and start speaking to the management and go to the management, it's time to slip into a very, very quick break. But don't go anywhere. We'll be getting an answer to a lot of questions that we just talked about.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
we'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you
Alright, so just before the break, we tried to decode Signpost India. We talked about the income statement, balance sheet, etc. And now, to kind of take this ahead, to take the conversation ahead, we are joined by Shripad Ashtekar, who's the Managing Director of Signpost India, joining us now. Mr. Shripad, thank you so much, first of all, for taking out the time, and I hope I'm pronouncing your surname correctly. My first question to you is with regards to margins. You know, there's been a significant improvement versus FY25. Plus, you've said that going forward, it is going to be in that range of 25 to 27%. How sustainable is that, one thing, and what is going to be the right lever that is going to aid margins from where it is at currently of around 25% to that 27% mark?
Good morning. Thank you for connecting today. So currently the tracking with the current financial year with very strong visibility, our matured anchor and long-term contracts now generated more than 70% of our total top-line revenue as compared to last year, which was around 40% to 45%. So this approach of connecting directly with the client and skipping the intermediaries, which adds the stress to the cash flow and even to the number to grow. So creating the higher predictable baseline for our operations. And for 26-27, we are super confident and targeting a steady growth of 25% year-on-year growth and maintaining the similar margins what we achieved in 25-26. Okay. Growth will be driven by a clear dual engine approach where we actively deepening our market penetration within existing core geographies while simultaneously scaling our active 32 city network methodology towards a broader 100 smart city national footprint.
Right.
We are supporting the operations momentum with a highly disciplined capital deployment of 60-70 crores this year, primarily focusing on high digital enablement across these high traffic corridors.
Got it.
We are not majorly dependent on the billboard business. Our company is focused towards the data-led decision making and measurement of each deployment of the asset, including the measurement of a campaign.
Got it.
So that has added value while transacting with the brands, and they have given that signal of significant growth for our 26-27 and deepening that relationship with the client. And second would be the brand integration with the experiential mode, which will add value for the out-of-home advertising.
Got it. Okay. Mr. Ashtekar, the other aspect that I wanted to speak about is with regards to your trade receivable. That's jumped significantly, in FY26. What has led to this increase, one thing, and how do you plan to bring it down in FY27?
Yeah, so normally the industry, out-of-home industry works around 90 to 120 days philosophy. But as we shifted our focus from the agency model business revenue to the direct relationship of the brands, here the deployment of multi-city campaigns has worked in our favor and even for the brands. But when you deploy a large scale 200, 300 city campaigns, so the decision comes while clearing the invoices from the regional offices as the compliance. So we have internally deliberated this and discussed with the multiple brands, and across the stable of clients, we are now moving towards the milestone-based billing, which is like, suppose if we are getting a clearance from 45 cities out of 200 cities, so the invoices will be cleared for that 45 cities and not waiting for completion of 200 cities compliance. So that milestone-based approach has agreed between the clients and our new business team. So this will add a value proposition to bring down this current ratio of cash flow, and we assure we will surprise you by Q3 in this year by bringing this down heavily.
Okay, we look forward to that, Shivaji. In terms of the growth guidance, I think you just said that you plan to grow at 25%, if I'm not wrong. Just want to get a sense, what is going to be the lever of this growth? Is it going to be occupancy? Is it going to be pricing? Is it going to be the digital mix or new assets? How is it that you're looking at between the growth levers and the revenue mix?
So we are putting all effort to go with the unit economics and securely tied to long-term civic concession rather than a volatile real estate leasing, which structuralize and protect our baseline margins. And the financial yield of any asset is directly determined by two things: community density, computers density, and digital enablement. A traditional static placement can only host one advertiser at a time. In contrast, a premium digital asset in a high-density transit hub dynamically hosts multiple rotating brands seamlessly. The digital transition is our core margin multiplier. It is the exact mechanism that allowed digital advertising across the globe to jump sharply from 26% of our total revenue mix in this past year.
You've highlighted, right, that you're increasing your direct relationships more, and that could be one of the possible levers as to why your margins have also gone up. Right now, is there a breakup available of what the revenue mix is from direct clients versus indirect? And over a period of next 2 to 3 years, how will that growth trajectory be like?
So if I put that forward, which is a PSU agencies and the direct relationship. So PSC is also a direct relationship. So overall, if we see the number of percentage, which is 70% plus, which is currently a direct relationship, and 30% through the aligned global agencies. But certainly the 70% has immense potential to grow more than 15 to 20% within the asset base what we have, plus the asset-led model which we are adding through the Dalal Street Soldier survey, which we did for 100 cities, which is a physical survey, and layered by AI tech, which we have signed with SPGen, where we are working towards adding the e-commerce, quick commerce, then transactional data, then your travel patterns, which is more than 70-80 patterns, which will be added on the physical data. So that will add a capability while delivering this 70% plus direct relationship, more than that what we expect.
You just talked about this asset-light orchestration model, right? Just want to get a sense as to how big can this be going forward, let's say 2 to 3 years down the line, and what are the margin profile that investors can expect from this one?
So this asset-light model is working in favor of the direct relationship what we have, and we are the only one which are using a software which is inbuilt as a Captura with us. For example, we bid for empanelment with the largest automobile company in India for empanelment for the services to be driven across the country. So out of 5 agencies, we were the only one which were using the different software, and all 4 were dependent on a one software. I'm not saying that is good or bad. I'm saying the approach what we have taken, which is a physical approach plus the digital approach, has added the value for the brand to assess and make a decision faster. And even the planning tool which we are using, which is leading now towards the AI model, which will help us to deliver faster and operate asset on a lighter mode.
Mr. Shripad, thank you so much, for taking out the time and helping us answer all those questions, and all the best for FY27.
Thank you. Thank you so much.
All right. So with that, viewers, we're completely out of time on this edition of KYC, but do stay tuned. More news and updates on the other side of the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the
Benchmarks recover with Nifty hovering close to 23,400 and Sensex hovering close to the flat line. Energy, FMCG lead the gains while metals and IT remain under pressure today. Rajesh, exports hits lower circuit today after market regulator SEBI has banned the CMD from dealing in the shares of the company, citing prima facie findings of large-scale financial misrepresentation and fund routing irregularities. The centre may soon relax the tax rules for the foreign investors in government bonds through an ordinance in a move aimed at really attracting the global capital and strengthening investor participation amid the heightened geopolitical uncertainty. The government's new vehicle scrappage push for Delhi NCR has put MSTC and MMTC in the spotlight today, with investors betting that higher scrappage activity will boost the demand for organized recycling and scrap the disposal services. Hello and welcome. You've joined us on Markets at 12. I'm Nisha Podar, and let's take you through the market action at midday today and take a look at Nifty 50 turned into the green now, and it has been a huge amount of recovery also from the low point of the day. So about 220 odd points from the low point of the trading session, while from the high point of the trading session it's down about 30-40 odd points. So we are really looking at a 200-250 points kind of a movement, and that tight range in which Nifty 50 has really performed today. If you really take a look at the internals, most of the sectors are really doing well in trade, are on the green side after the kind of sell-off that we saw yesterday for the large part of the session, barring the last few hours. But when we talk about IT, there has been a lot of confusion building, and that's why that particular area is something which is in the red. When we take a look at what's really aiding Nifty 50 today, well, it's a tale of two cities when we talk about the banking space, because ICICI Bank is the top gainer, adding about 18 points to Nifty 50, while on the downside, HDFC Bank is also eroding pretty much the same amount of points coming in for Nifty 50. So then SBI is also getting a good momentum. Along with that, some of the consumption stocks like Eternal, Titan, ITC, these are the ones which are really on the gaining side, while big boys, even in telecom and other capital intensive sectors like Bharti Airtel, RIL, all are weak in trade today. So that's a snapshot of the market, and IT remains a laggard. But when we talk about the mid-cap universe, that is the one where the action is really building, and that's the space which is doing well. Narendra Solanki, the head of fundamental research investment services at Anand Rathi Shares and Stockbrokers, joins in now. Narendra, always a pleasure to welcome you on NDTV Profit. What do you make of the market today after weakness that we saw for a large part yesterday? Today, it is slightly listless in a small, tight range of volatility. But when we take a look at the broader markets, there is buying seen there.
Yeah, good afternoon. Yes, of course. And even after the result season, which were decent, I think that now markets are poised for the policy actions from the RBI as well as the Fed. And I think next 3 to 5 days would decide how these policy outcomes comes. Especially markets should be watching the commentary of the governor regarding the inflation trajectory and the estimates around GDP growth, whether the governor sees any risk to the growth, and what kind of inflation the bank sees from the West Asian crisis impacting the Indian economy. So I think those are the cues which would be market would be closely monitoring. Until then, I think market would continue to remain in a very narrow range, and then only I think market would take a direction post the policy meet.
Right. So when we talk about the policy meet and the constraining factors, of course, inflation could be projected on the higher side, and then growth could be actually revised downwards. Narendra, from the RBI policy perspective, and that is an important event that the market needs to see tomorrow. But basis that, what could be the investment strategy, and are there any trades at play?
See, coming to the sectoral play, we continue to remain broadly focused towards domestic-based sectors. And we feel that the push from the government, both in terms of private as well as public expenditure, would continue. And the focus of government on improving infrastructure investments, continuing investment into developing and pushing Make in India would continue to be the mainstay of the policy push. And from the private sector perspective, we feel that auto inquiries are still the best.
Right, Narendra, sorry to interrupt. There is, HS Puri is speaking at an event. Let's cut to that.
this entire range of new energies, new technologies, and particularly flex fuel. I'm very grateful to Takeuchi-san, the MD and CEO of Maruti Suzuki Limited India, not only for this event, along with his other colleagues whom you heard from, but more important for the policy decisions that Maruti Suzuki has taken, which today place it in the unique position of leading this flex fuel in the automobile section. And given their numbers, their commitment to it makes the difference. Just yesterday, but I also want to welcome my colleagues from government and industry. I see many of my colleagues and friends here, leaders of the India's automobile sector, friends from the media, ladies and gentlemen. Yesterday, I had the privilege, along with Gadkari ji, of being part of the launch of India's first 100% ethanol-compatible motorcycle with Hero MotoCorp. Today, that momentum advances further as India's flex fuel journey expands from two-wheelers to four-wheelers, and this transition is significant. I think numbers sometimes are very useful to cite because those numbers tell a story. Today, India has over 30 crore two-wheelers on the roads. But we also have 37 lakh passenger vehicles representing the aspirations of middle-class India, family mobility, and the future of personal transportation. When flex fuel technology enters this segment at scale, the impact multiplies dramatically. Today, Maruti Suzuki, India's largest passenger vehicle manufacturer, takes a decisive step by bringing flex fuel technology to the mass market. This is not merely a product launch, this is also the beginning of a new chapter in India's energy transition.
All right, Hardeep Singh Puri at the Maruti event where they're launching flex fuel car. And that's what he was talking about energy transition, especially at a time because of the war-related crisis on fuel, and therefore the dependence needs to really reduce. Narendra Solanki, we were talking about the market, you were talking about the various sectors that you are upbeat on for buying at the current moment. But when we look at the overall market, in the short term, till up to the earnings cycle of this particular quarter, how do you see the market momentum and what should be the short-term strategy in terms of cash conservation and deployment?
Yeah, see, right now, if you talk about the broader market, so what we think is that right now the markets are very stock-specific, or you have to bet on a stock-specific stories rather than looking at the broader indices, especially the major indices. What we say is that major indices may be in a very narrow range, let's say 1,000 points on either side, but the real growth story or the real investment ideas will be coming from the individual stock picking per se. So that is where the money is to be made for at least next 1 to 2 quarters. And if you even if you see the recent performance by on a stock specific basis, you will see there are many stocks who have risen to more than 20-30% in last week or so. So that is how to play the markets, and that is how we see that the market should be playing in for next quarter or so.
Right. So also looking at, the next earnings, how much, Narendra, of the bad news is really baked in, and how do you see the overall momentum of the market up to next couple of months or so?
See, it's very difficult to say because the kind of expectations and the volatilities and the outcomes which we listen on a day-to-day basis regarding the West Asia crisis. So it's very volatile and undecisive situation. So we do not yet know what kind of an impact and how soon the resolution would happen. So hence it becomes very difficult. Having said that, I think largely whatever has happened regarding the supply chains, the impact has been priced in by the markets. Now, what remains to be seen is that how soon the crisis gets over, and then the market would be pricing how soon the recovery may come. So that is what is yet to be priced in by the markets. And coming to the consensus earnings, I think the markets right now are targeting somewhere around 7 to 8% kind of earnings growth for FY27. So I think 2 months before this earning growth was hovering at around 11 to 12%. So I think we have already seen 500 to 600 kind of bips cut down in the earnings estimates. So I think that largely the crisis has been priced in so far.
Right. All right. The crisis has been priced in, Narendra, you're saying. What's your view, especially on IT? There is a divided house, and there have been enough volatility that has been seen on the IT counters and IT index, and they all have moved in the same fashion actually for the last few trading sessions, either on the upward side or the downward side. What's your view on especially the top 5 IT companies and a few other mid-cap companies when we talk about the bread and butter and the AI thrust? How would you play that? Is it still a buy?
See, as far as IT sector is concerned, in short term, it would continue to show these kind of volatilities which we have seen in last 4 or 5 trading sessions. But if you see on the valuations front, we have seen enough erosion in the valuations, and right now most the sector is trading almost near to its 10-year averages. Now this valuation erosion may not be completely recovered because the market estimates that there would be some earnings deterioration which may be coming, and the kind of earnings growth which we have seen in the past may not be there for most of the stocks. So hence the valuation multiples erosion has happened. But our view is that we are very constructive on the sector. But one thing you have to maintain is that the recovery would be a rear-ended recovery, which would mean that it would still take 2 to 3 quarters more, because the kind of investment the companies have made in India, especially on the AI front, would take at least 2 to 3 quarters to materialize and show in the numbers. And hence you must have that kind of patience in order to earn from the sectors. And right now, yes, we are more positive on the mid caps rather than the large caps, and it's right time to start accumulating mid cap IT stocks, especially in a staggered manner, and have a patience of around 3 to 4 quarters in order to completely see the return from the sector.
Accumulation of the mid-cap IT companies, that here I would say that some of them have really made the plunge towards AI space as well, and that will be critical to really watch. All right, so that's a lot of information. Narendra Solanki, thank you so much for joining in with your expert take on the markets and the investment strategy. Thank you so much. All right, let's jump on to one particular counter. And we are talking about Rajesh Exports. In fact, take a look at that particular stock. Has hit lower circuit after, remember, SEBI really issued an interim order alleging large-scale financial misrepresentation and also diversion of funds by the promoters. But what exactly are these allegations, and how did the company really misrepresent its numbers? Nimit, my colleague, is here to explain what happened. Nimit, tell us.
Yes, Nisha, for 5 years now, Rajesh Exports has built itself out as one of the world's largest jewelry refining companies. Gold refining operations across Singapore, across Switzerland, across the UAE, and over 5 years built a stock high, a market cap way above what people expected. And with that, everybody bought into that story. But a SEBI investigation that's been going on for about 3 years now, with an interim order coming out yesterday, breaks the shackles on all of its built up. It shows a story of complete misreporting, inflated numbers, diversion of funds by promoters, and a corporate layering of ghost holding companies that brings us down to one Swiss subsidiary where we do not understand how a 3,000 crore subsidiary can report numbers of 15 lakh crores. Let me take you through this. Now, this is the latest financial statement that SEBI has published about Rajesh Exports. Now, if you can see the consolidated revenue of operations, now this is of the entire conglomerate, including all the subsidiaries. From 2020, it's from 258 crores, 243 crores, all the way up to 778 crores. Now, if you look at the standalone revenue of the Indian holdco, Rajesh Exports, REL, it is 9,189 crores. The difference between these two is staggering, and that is what caught SEBI's eye. How can the holdco report its standalone as 9,000 crores when the consolidated revenue here is at 778,000 crores? The mismatch, you can see the number on the red right at the bottom, is 98.82%. Every year, that mismatch is close to 98 and above. In fact, in 2020, 2021, that mismatch was 99.20%. That means that less than 1% of the company's revenue came from the holding company, the standalone REL company, which was sold as a 15 lakh crore giant for market cap and for investors. Now, let's move on to a more detailed slide here where we'll understand how this happened now and where this money is really coming from and how much of it is actually true. Now, if you look at that consolidated revenue, this is the number that SEBI is really concerned about. Consolidated revenue over the last 5 years has come to 15 lakh crore, 15 lakh plus crore. Now, but the standalone revenue again has come to 26,000 crore here. If you look at where this is coming from, the difference of 15 lakh 18 crore is what SEBI is looking into now. The key finding here is they did a bunch of multiple structuring across Singapore, across Switzerland, through holdcos, which finally comes down to one company, Valcambi SA. Right in the corner over there, that's a Swiss company which was sold as a gold processor, simply a processor. Now, how can a processor of gold be your largest revenue generating asset? Processing of gold is less than 1% of the revenue in gold refining as per SEBI itself. But here it shows that 358 crores came from there. This still doesn't tie up. So the misrepresentation that you can see is at 15,015 crore there. That is again a percentage that you've seen before, 99.8% misrepresentation. If we understand this further now through the corporate structure of the company, let's understand how this company has been operating. Rajesh Exports Limited, the Bengaluru-based Indian refiner, has a Singapore subsidiary, REL Singapore. Now that owns 95% of GGR, a key company in the investigation here, because what Rajesh Exports said is a chunk of its value came from GGR. But GGR, the SEBI found, has nothing of its own, produces no revenue on its own, has no client list, nothing was produced. And then they went further. They found that this owns 100% of Valcambi SA, the Swiss processing company that should account for less than 1% of revenue. And as we saw before, Valcambi is the company that really was producing any amount of revenue for this group. And that is, of course, then holding 100% of USA and 100% here in ACC Storage Energy, as well as another UAE company held by Singapore. So what they built out is a corporate wall which we cannot penetrate. And SEBI has now gone and penetrated that wall and is asking for more and more documents. We also spoke to Rajesh Mehta about what happened. And Rajesh Mehta, if we move to the next slide, will tell us that this is still an interim order right now. He's being defensive right now. He's saying that the findings are not accurate. It's an interim order, although this investigation has gone on for 3 years. We hope to hear from Rajesh Mehta soon as well, because they say that they're going through the findings and will shortly issue a detailed statement on what they believe the SEBI interim order is saying and what they believe actually happened. And we'll keep you updated on the key highlights from that.
All right. Thank you so much, Nimit, for that exhaustive research and getting us all the details of that big developing story. All right, moving on to another important aspect. The Union Cabinet has really approved an aviation turbine fuel, or ATF, price stabilization mechanism yesterday. Remember, which aims at reducing the fuel cost volatility for the airlines to really work smoothly without much escalation on prices. But on the other hand, remember, this 10,000 crore rupees of revolving fund that has been created at this particular point is something that really gives the under recoveries to the oil marketing companies. Let's focus on the oil and gas space and how it impacts the numbers as well as the stabilization fund support to the OMCs. Kirit Parekh, who's the oil and gas expert, joins in with the impact being really penciled in. Kirit Parekh, always a pleasure to welcome you on NDTV Profit. My first question, how do you read into this kind of a measure by the government, an interim stabilization fund of 10,000 crore rupees? And from the oil and gas marketing companies' perspective, how does this really help?
Well, I cannot understand why the government has done this, because usually you could say those who are flying are not the lower income group. They can afford to pay more, and I think the airlines should be able to raise fares if the fuel prices goes up. But if the government has decided to now stabilize this, not to create a sense of inflation in the country, then you can understand this a little bit. That yes, this is just a way of creating a feeling that everything is going all right. The government is in control and it will be able to manage this economy. But this 12,000 crores have to come from somewhere. And my feeling is they will come from the government's, but fiscal deficit will go up, or if they want to really control fiscal deficit desperately, then they would cut down many investments and so on.
All right, Kirit Parekh, I understood that aspect. Just very quickly, and we are short on time, unfortunately, what should be the suggestion from the oil and gas perspective to avert this situation and still have sanity in the aviation space? What will be your measured recommendation?
Well, my recommendation would be to really increase the prices, airline prices gradually. Let the airlines bear some of this cost, and the government should really say that we are going to not let it exceed to certain level. So put a cap on it, but doesn't have to really use these funds as much as or use it as little as possible, so that it doesn't put a undue burden on the government finances.
All right, Kirit Parekh, thank you so much for joining us on this development. Thanks for your expert take as well. Completely out of time on this edition of Markets and 12. But remember, market action really continues on the other side. Stay tuned to NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. What